just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
You said it. You finally said it.
I'm so bullish.
Andy's bullish. I'm bullish. We're bullish. We're on 4th floor today. We're going to be on floor 1, and then we're headed straight to the moon, boys.
Hey, happy Friday.
Friday the 13th. It's a little spooky out there.
First day of the week that we've talked about the market, and it's been green.
Hey, I just think, shout out, happy Valentine's Day coming up tomorrow. You got to just say.
Shit, I forgot about that.
You got to just say, I mean, to anyone that doesn't have a girlfriend, you look at the candles out there. It's all you need.
Yeah. I saw Thread guy had a stream. It was like, good morning from Quai Network. He was like, dude, if you don't have a date locked down by Tuesday this week, then you're cooked. Thought it was pretty funny.
Thread guy's a certified lover boy. That's for sure.
100%.
The market's going to bail out everyone on these expensive dinners they're taking people out on.
What's going on? Hype 31.7. How about Sky? How about Neo freaking Finance? Shout out to everyone that was on that Aave train. Rumor mill's hitting hot this week. Layer 0, Aave, Sky, Ethereum Foundation, Uniswap, BlackRock. Guys, we hit a lot this week in terms of news coming down the wire. So, guys, we got a sick stream today. We've got Rune from Sky, the founder. We've got Stani, the founder of Aave. We've got the Optimism founder, Karl. We've got Securitize's new head of issuance and issuers, Zen Gui, and a lovely member from OpenTrade. So, a lot of tokenization, a lot of neo finance, a lot of kind of token talk today. Should be a banger.
Look, I am particularly excited because we are crossing the chasm on Rollup TV. We've got representatives from both sides of the aisle. Obviously, Stani's been on the show before. Rune has been on the show before. These guys are Goliaths in the DeFi world. And then you flip over to the other side, and you've got the institutional world. You got tokenization coming from Securitize and OpenTrade. And then Optimism is kind of an RWA dark horse. And they've pivoted quite a bit, refined their strategy when it comes to RWAs. We'll be hearing from Karl about that to get us warmed up. Without further ado, plenty to go over. Andy, we got 20 minutes before Karl joins. Why don't we get right into it?
Yeah, man. Let's do it.
So, first and foremost, Innovation Advisory Council. Plenty of people that we know on this, which is particularly exciting. And so the chairman of the CFTC, Mike Seelig, said that he's proud to announce the Innovation Advisory Committee, the IAC's broad financial sector insights, which actually is pretty broad. Obviously, a lot of these people come from the crypto world, but then you have DraftKings and FanDuel founders on this list that we'll get into. These guys will help the CFTC future-proof its markets and develop clear rules of the road for the golden age of American financial markets.
Yeah, man. I mean, it's kind of funny that the title here in the image is the Kalshi screenshot.
Yeah.
Golden age of financial markets, prediction markets. Claire Cart commented on my tweet and was like, "Don't forget gambling." Thought that was pretty ironic.
Well, I have something to say about that because I think people forget that when you're looking at gambling markets, oftentimes they're clearly a risk on industry, but it's a lot of the same financial infrastructure that underpins like you know prop betting and parlays and money line things. And so these are just another form of markets. Prediction markets are blurring those lines even more. And I think the fact that you have FanDuel and DraftKings people on this list shows that they're actually one of the more forward thinking groups within the broad industry of markets.
Yeah, I mean,
And they're able to
the
take
list is nuts.
they're
By
able
the
to
way,
take risks. Yeah.
yeah, they are. I mean, you've got Hayden Adams, CEO of Uniswap Labs, Brian Armstrong, CEO of Coinbase,
Shane from
Shane,
Polymarket.
CEO of Polymarket. You've got Tom Farley, CEO of Bullish. You got Brad Garlinghouse, CEO of Ripple, president of FanDuel, CEO of Kalshi, CEO of Crypto.com,
Chris Dixon from A16Z.
Sergey from Chainlink.
Let's not forget our boy Vance Spencer from
Vance is
Framework
on there.
Ventures. You know,
Um,
one of the founding fathers of Neo Finance.
the CEO of Intercontinental Exchange, Vlad from Robinhood. So pretty insane lineup. I was getting some pushback on my tweet. People were saying like they were expecting that this wasn't that positive for DeFi because the people that were kind of coming into this world there's not much DeFi support here other than Hayden. So they weren't that positive on the DeFi aspect of things. Look, I mean, this is just the state of things, right? We're moving into a world where we have a innovation advisory committee because so much is happening on chain with prediction markets, with DeFi, with these new types of asset classes, new types of markets. And
Yeah.
I don't know, man. This list also, people were saying it looks staged, looks put together. I don't know. There was a lot of interesting takes around how this list was created. Let's put it that way.
It sounds like people are upset that they weren't included on this list, which is how it goes for any list. I think it's important to keep in mind that this is the CFTC. And so when we're thinking through the impact that these people will have on financial markets and innovation, it's primarily going to be derivatives and commodity markets. The fact that they're taking into account so many crypto people inside of a commodities market innovation council seems to me that a lot of these things are either going to get a carve out as their own asset class or be considered commodities altogether. And so when you're looking at, how we're going to split up DeFi tokens, yield coins, these sorts of things, there's been this whole debate. Are they securities? Are they commodities? Or are they something completely new? Clarity Act is going to help distinguish this as well. Okay. Well, I'm for this. I think the fact that they're taking into account, and this has been a pillar of this entire administration, they've taken industry leaders. Like you have Scott Bessent, someone who's proficient at trading currencies in charge of the treasury. It just makes sense to put industry leaders that are at the forefront of financial innovation into a place where they can advise the administration on how to navigate that innovation. I just think that they're so much more open-minded and thoughtful about the direction that this regulation is heading. And I mean, call me contrarian, but I think this is bullish.
I mean, I hear you, man. I think it's positive for the market as well. I just think that there's definitely some pushback around these like elite committees being created to dictate the markets. And yeah, so anyway, moving on. Congrats to everyone who was listed. Big day. Moving on from the Chairman Selig's post, we've got the Fed paper. It's just initial margin weights for their new product, which is kind of surprising as well in its own way. Margin weights for crypto-linked derivatives. Okay,
Yeah.
interesting.
Yeah. Again, something that we've been talking about quite a bit, Andy. I've been harping on the idea of credit creation as a result of tokenized equities and tokenization of digital assets.
Yeah.
The more that we're able to tokenize, the more that we have a better understanding of risk and where it exists within the system at any given time. This makes liquidators and margin callers a lot more willing to extend credit, which doesn't necessarily mean rehypo. I was a rehypothecation minimalist for a long time. After Terra Luna, after FTX, I thought if we're extending loans and we're issuing credit, that is a bad thing. That is leverage. And that's just going to lead to a systemic liquidity contagion. And it inevitably ends in blow up.
Yeah.
I've come to realize that, through the basis trade and through just a better understanding of financial markets as a whole, that our system rests on loans and credit. That is what has been ever since we got off the gold standard. That's the way this system operates. And so it's actually not, debt isn't necessarily a bad thing. It's just something to be, something very powerful. It's something to be used responsibly. And so when we're looking at how margin is being computed, within tokenized derivatives, I think this is a step in the right direction. Again, regulatory rules of the road are going to have a better understanding of where risk is, where margin is extended, who's overextended, and ultimately where we should liquidate positions to maintain healthy debt in the system. As we're able to get a better understanding, we issue more credit, we issue more debt, and this is how the things go around.
So a couple of notes here. The Fed is basically recommending separate risk weightings for floating cryptos, basically ETH, Bitcoin, and then obviously peg stablecoins have, they have quote unquote different volatility patterns. They're trying to basically create a benchmark index to model crypto market behavior. Yeah, I mean, cool, great. Congrats, Fed. This is part of their shift, right? This is part of the broader bank engagement with crypto. Skinny master accounts apparently are coming for crypto companies at the Fed, perhaps. So
yeah, that was announced a couple months ago, the skinny master accounts.
Yeah.
I think, it's important to remember that the Fed obviously controls interest rates, and we have, Jerome Powell and Kevin Warsh get on the podium every once in a while. And then they control some aspects of regulation, but by and large, the Fed is also doing research. And so when they put out these papers and like these thought pieces, I think it's important to read between the lines here. The Fed proposing margin weights is a suggestion to brokers when they are the ones that end up implementing margin requirements on tokenized assets. And so you can really think about this Fed paper as a research piece that they end up giving to Goldman and Citadel and Citi and the institutional market makers at large that are now starting to, and JP Morgan, that are now starting to get into, the crypto brokerage game. And because they are just now kind of getting into it, they don't have empirical data to base a lot of these requirements off of.
Yeah.
It requires simulations. And so I think if you're looking at what the Fed is doing here, it's research, and it's indicating that more of these brokerages and institutions are going to get deeper and deeper into extending margin on tokenized assets.
Cooker, a big Twitter account guy, responded to one of my tweets yesterday, and that was kind of what I said about what's going to happen in the immediate term for tokenized assets, neo-finance, private credit, et cetera, is just this extension of credit on chain. So let's move on here from the Fed and their new margin weights.
Yeah, next we got Jesse.
Interesting post here.
Yeah, so again, there's rumors coming out all over the place. Jesse's arguing that the SEC could issue a token safe harbor for what they're considering non-security tokens and legitimize cash flowing DeFi tokens as a formal asset class, not securities, but have a carve out in the regulation for this asset class in particular. And we've been calling these yield coins.
Yeah, I mean, what they really are is they're basically securities on chain, but they have different properties than other, actual securities, because they run on these immutable smart contracts or these decentralized smart contracts. They're non-custodial, right? So the way in which that the revenue is generated is not typical, like customer paying. It's like fees from, different, it is customers paying, but it's not like a B2C transaction. There's liquidation fees. There's all these different types of things that happen. So my take on this, the anticipated SEC safe harbor for non-security tokens will formalize cash flowing DeFi tokens as an asset class, making them institutionally investable. At the same time, traditional assets are moving on chain, in part thanks to forthcoming rulemaking on security tokens. My take is I agree with Jesse. I think he's right. I think as a result of BlackRock buying Uniswap, that would not have happened if there was not some upcoming regulation coming for cash flowing DeFi tokens. I also believe that Aave's move is a part of this. Aave finally was released from their SEC investigation last August. I believe that this happening is going to set up the greatest asymmetric return trade in the entire space we've seen over the last 6 months. There's going to be this realization in the market that the narrative-based tokens are completely fried, and the cash flowing tokens are now able to return cash back to their token holders in a regulatory compliant manner should this in the market structure bill go through. I believe what's going to happen then is that there's going to be a massive shift in capital allocation on chain and on centralized exchanges, where there's going to be a very dense concentration into these cash flowing DeFi tokens. A lot of them are in our N7 Neo Finance bucket: Sky, Aave, Morpho, Hyperliquid, and
Hyperliquid,
and many of these likes. And so my take is I agree with Jesse here. I think he's right, and I think this is going to set this stage for one of the biggest transfers of allocation profiling in crypto that we've seen in the last 6 months.
This is the rotation. We've been talking about this for months, how you're right. The previous group was narrative-driven tokens, and you saw these things swell up and then ultimately just bouncy ball, volatility, death all the way down. The roller coaster meme, if you will. Now you have a small group of actual businesses that are driving revenue on chain. And so if you're looking at the broad swath of assets that are out there, you have this long tail. And if you're thinking that there's a rotation, which we are, of capital from this long tail of assets into a smaller subset of the token complex. And these are altcoins or tokens that have real businesses. They're driving revenue, and those businesses are actually driving the revenue back to their token. We're going to see this capital swell into this subset of this asset class. And in particular, we had yesterday we had Santi on, right? And Santi is talking about the difference between equities and tokens, and how equities are a right to future cash flows of a particular asset. That stock. That's what an equity is. And right now that assurance does not exist in the token market. What I think this asset class carve out could do is it could bring the gap between equities and tokens closer. And yes, you have to set aside yield coins, but thinking about what these network tokens that have real businesses are, these things have cash flows, and the investors deserve a right to those cash flows if you're buying the token. So I think absolutely this is something that we're going to see more of. And it does open this to a new set of institutional investors because they're used to the investor assurances from equities. Now, if we see that in tokens, we're going to see a large suite of investors come into the space.
That's also a big important takeaway that I was talking to a couple guys from some pretty good solid funds yesterday and talking about how this makes Aave institutionally let's just move on to Aave. Because I think what happened there is that Aave now becomes institutionally investable if this goes through. It's kind of the
Aave's got
the feedback that I got from.
We're going to talk with Stani, but I mean, I was looking into Aave's revenue last night, kind of prepping for Stani. I mean, they've got $100 million revenue streams. So absolutely, there's a business here, and if this is flowing back to the token, then we're going to make. Aave's something that would be, I'd be curious to see where they would rank in terms of equity if the token had similar investor protections.
Yeah, I mean, it's definitely pretty cheap right now, I think, but not really sure. All I know is that if you guys were a part of that, part of the Aave fam this week, good trade. So a new alignment framework that directs 100% of product revenue to the Aave DAO treasury under a token-centric model. Effectively, this is I mean, this is the great unification of token and equity.
Yep.
We actually had Sam from Frax come on and talk about this year, how he believes this year is going to be the great unification year. And I think this is a great example of this. So, there's a couple of key takeaways from this. One being that 100% of the protocol revenue goes to the DAO / token holders. The other kind of key takeaways here is that there's a solution for protecting the Aave brand. They will ratify Aave v4 as the protocol's core technical foundation for future development, and they'll create a framework for the DAO to fund strategic growth and development. So pretty awesome for Aave, and tokens responding well. And yeah, I mean, I'm pretty excited to see that Aave's winning. I mean, I don't know how else to put it. We are literally we're watching them win. They deserve it. So Aave is definitely a security, then bullish. I don't think it's a security. It's part of this new asset class of tokens, is my take.
Yeah, obviously this is something that is a for-profit entity. And so it is trying to maximize shareholder value or token holder value. But the way it derives that value is fundamentally different than an equity. And so, right now you have the DAO and you have the labs. If these things were to fully unify, then we would have to look into why, these things might not be considered securities. But at the current point, there's still a separation of the two entities. And I think that is part of why we're seeing this carve out. And so part of, what we're seeing from Jesse Walden kind of arguing this token safe harbor is that cash flowing DeFi is a new asset class separating from cash flowing equities. The reason being a variety of different reasons that I don't feel particularly
Sound good. I don't think we're going to comment on the legal structure here, but guys, if you're watching on YouTube, smash that like, smash that subscribe. We're here hanging out. We're here every day. We're going live from New York City in 2 weeks. You guys are going to be blown away as what we're about to put together. Guys, we're going to move on from Aave. That thing is ripping. Rumor mill strikes again, and stoked to be here today. Our first guest is coming up really soon. But guys, Degen Spartan is back. Degen Spartan is back, and he's
investing in stable chains.
Stable coin blockchains. As the era of stable coins becoming the primary trading asset medium exchange of the internet, better infra is needed to support it. Blah, blah, blah. The growth of stable coins is undeniable, and effectively, Egro Capital, Degen Spartan is going into stable blockchain. When Cow, yeah, man. I mean, Cow is also a damn good one that has revenue. They need to figure that out for themselves, but I bet they will. That is part of this. I think CowSwap is an interesting one. Thanks for bringing that up.
Yeah, it's a good one. I use CowSwap.
So if we scroll down a bit, we can see kind of more details about their investment. Keep going here. Obviously, stable coins are ripping.
I've a
transaction values flying. Stable the token. Let's look at the stable the token. Let's see. Stable's ripping as well. It's performed well in the last since Christmas. It's performed quite well. Hash dollar. Yeah, I mean, dude, I generally agree with this thesis. We are bowled up on Plasma. We have Plasma venture bags over here on our Good Idea Ventures fund. That's where we're placing our bets. But Egro Capital seems to have gotten some sort of OTC or opportunity to invest in stable. So congrats to them. Stoked for them and hope it goes well. And I just generally agree directionally with the thesis. It's a little bit weird that stable has been outperforming Plasma so much. But that's the reality that we're living in. So we will see what happens when Tempo goes live. ARC as well. I think all of these are probably going to end up doing okay. So that's where we're at.
Yeah, this is part of the neo-finance thesis. Stablecoins are at the core of it. And stablecoin blockchains like Arc and Plasma and Stable are building out a suite of financial products focused on stablecoins. I saw Hamachi's announcement yesterday about refinement of their strategy from general purpose perps to FX. And I think perps is such a significant modality of financial markets that it can be applied and specialized into particular areas. And so, yeah, shout out to those guys. I think they were able to execute. I think it was $10 billion in volume, which obviously compared to Hyperliquid, is rather small market share, but it shows product market fit. And I think that is the key piece here, that they're now able to specialize. And so I think they made a nice partnership with Circle and Arc as well. And it just makes sense that we're going to see more of these specialization plays. And so blockchains, specialize into stablecoin blockchains. We're seeing perps specialize into tokenized equity perps, Forex perps. This is a further refinement. And a lot of the financial experimentation ended up getting too general. And now we're seeing teams niche down, which I think is actually a positive development for the industry.
And so, all right, guys, we've got our first guest, Karl Floersh, ready to come up on stage. He is the co-founder of Optimism. They've just recently brought ZK proofs into the OP stack. Happy to chat about that, but stoked to actually hear about their tokenized assets thesis, RWA push, and just kind of like generally what they're seeing with their institutional flows. Lot going on in that side. We're calling it neo finance. It's what we think is the next and most important wave of this industry for at least this year, if not the next couple of years. So let's get Karl up and let's get this show started, guys.
There he is. Karl, welcome to the show, man.
Yo, calling in from one of those booths, those like sick telephone booths things.
It's all about the audio quality. It's good dampening in here,
Yes, sir.
Absolutely.
How you doing, man? Happy Friday.
Happy Friday. I'm doing great. I'm thinking about enterprises. I'm thinking about OP enterprises. It's been this is my
We're
favorite
thinking
topic.
about
I'm glad to
enterprises.
jam.
Absolutely, man. Well, according to a blog that Optimism posted recently, the tokenization of RWAs is expected to be the primary driver of on-chain asset growth over the next 10 years. So it's no surprise that you're thinking about enterprises. Tell us why you're thinking about enterprises and how you think enterprises are going to contribute to this blockchain space.
Oh, yeah. I mean, I think we are in a real radically transformative moment for crypto. This has been kind of, honestly, in some ways, years in the making. We've been like, oh, the financial rails. We are creating the new financial rails. And we've been saying it so much. And it is insane to see that, like, after, 10 years of talking about this stuff, that it's finally coming true. Like, we've already seen we've already launched like 50 live chains, tons, billions in TVL, but we are starting to see a massive influx of all of these enterprise institutions, like major financial companies that want to bring their assets on chain, because bringing your assets on chain gives them all of these new capabilities that otherwise would not be possible in the traditional rails. And so we're basically where, kind of where we fit in is we're the folks that are out here trying to make sure that everyone who wants a chain has the ability to deploy that chain and not have to worry about all of the crazy Web3 crypto insane stuff with, upgrade security and, management. We're trying to make that process as easy as possible so that we can go from being, candidly, a fraction of a percent of the global financial system to, 100%. Let's go.
Oh, yeah.
Yeah, man. I'm curious kind of about some of the, so we actually had Mark and your product guy on in Buenos Aires. I'm blanking. And we were talking about kind of like what they're after, and this kind of new era of institutional flows in terms of capital, as well as demand to interact on chain, and also this new era of existence in the market of like less speculative demand for block space internally within the crypto natives has also dried up quite a bit. I'm curious, like when it comes to interacting with, whether it's the JP Morgans, the Fidelity, small banks, asset managers, funds, custodians, etc. Like, what is it that you guys are providing that is really sticking? Like what is it that is interesting to non-crypto folks that are running more traditional financial strategies, funds, etc. firms? What is it that's interesting?
Nice. Yeah. I mean, resoundingly, they want one, control over their rails. They want to have a chain where they can, bring their assets. Two, they want to be able to differentiate their chain from all of the other chains. They want to be able to customize it to make it special built for their needs. And three, they want it to happen fast and not to worry about all of the general there's a perception that it's really hard to deploy a chain, and that perception is backed by something, understandably, but it really doesn't have to be backed by something. It should be incredibly easy, and in fact, we know how to make it very, very easy to bring a new chain into existence. So it's like overwhelmingly, it's happening.
Yeah, it certainly is. Karl, I'm curious about how Optimism will fit into this broad neo finance stack. We've been talking about this essentially as stable coins have been the wedge by which the legacy financial ecosystem and the DeFi ecosystem have really started to blossom. And then you've got a ton of financial mechanisms that are built around stable coins. And so, I'm also looking at this blog post. It seems that a lot of major institutions are projecting RWAs in the trillions. Right now, we're looking at about 35 billion in RWAs as of the end of last year. You've got Citi projecting 4 to 5 trillion. You've got Deloitte projecting 3 trillion. JP Morgan projecting 16 trillion.
Man.
Standard Chartered projecting 30 trillion. This is all by 2030. And so once we have, trillions of RWAs on chain, how does Optimism fit into this market?
Yeah, I mean, we're bringing the rails where those RWAs will sit, right? Like, if you're bringing billions in assets that you are, responsible in some way for, you are managing, you are somehow able to bring on chain, you better believe that you're going to want to make sure that the rails that you are built on are, enterprise grade, that they are controlled by you, that they're customized for whatever your, users need. We are going to be the kind of catalyst. That's our goal, is to be the catalyst that makes that transition so easy. And it really is going to be a massive, massive transition. I mean, Ethereum and its L2s already are like 65% of all the RWAs today. And I think that lead, and we're just seeing the beginning of RWAs coming on chain without question. And it's very obvious why they would. Everything from 24-hour trading to you name it, access to more liquidity. Like, it's kind of an inevitable future. At least that's some might say. I'm sure that many here would agree.
Karl, so we're calling this neo finance. I'm curious to get your take on it. So we've kind of thought a lot about this idea of this convergence between legacy financial rails, these products, these applications, these whether it's a money market fund or a traditional private credit fund, et cetera, et cetera. And then you've got DeFi, you've got all the big DeFi applications, you've got the blockchains, and these two spaces are just converging very quickly to this newer era of finance. It's not fintech because it's not custodial. It's not DeFi because there's a forgot password button. There's a customer support agent who can help you. There's a much easier, cleaner UX. There's no seed phrase. There's no approve button. It's this neo finance era, and it's kind of coming together at this point. And so we're kind of thinking about this as like, it's the easier way to onboard people on chain in a much less kind of like scary kind of DeFi way. And again, then it takes it to the next step of like, okay, if we're thinking about like the enemies here, the enemies are kind of like traditional finance is still, custodial banks, T+2, trading settlement times, custodians, et cetera, to some extent. And then just like typical infra slop, no product market fit on the crypto side, no real demand, not any actual like real customers or users or revenue, and kind of like those are like the common enemies of the thesis. And then the thesis is really the convergence of traditional DeFi as we know it and legacy finance as we know it, kind of picking on the weaknesses of both and to actually make them a strength. Curious your take on neo finance. How would you describe neo finance?
I mean, it is. I like the term neo finance. Basically, what is seemingly incredibly clear for over 10 years is that there needed to be an upgrade to the financial system, and that crypto and crypto rails were so much better, and so, like, from a fundamental technological perspective, it made so much sense. But it was unclear if it was actually going to happen, if there was going to be the willingness, if there was going to be the adoption, maybe some other alternative path would be going, people would go down. But now we're at a point where it is actually coming true, and the actual willingness and the momentum is there, and it feels like it's gaining speed essentially every day. And so what I kind of see as this transition, I'm really excited to see it kind of evolve into I want to see a lot of diversity. I want to see all of these institutions coming on chain, and I want them to have the ability to, when they do come on chain, to bring whatever their expertise is and bring whatever their financial products are that they are, really good at building, and make the crypto ecosystem even more vibrant, even more diverse, even more customizable, all of that kind of stuff. Like I think there's one interpretation of the world coming on chain, and it's just like, okay, it's crypto, but bigger numbers. But I think that we are actually like, there's so much more that we can achieve when we have all of the institutional knowledge and all of these builders that are building out these financial applications that are just bringing perspectives that I would not have considered. Then, I mean, don't even get me started on you were saying that, block space has demand for block space has dried up. I see it very obviously. We are on the precipice of like every single AI agent, constantly asking for like, can I get like 0.0001 ETH? And this is like, I think we are like at the precipice of this transitionary moment, and it's like, anyway, it's funny because I mean, crypto is just the constant. You see the fundamentals, and then you just like wait for the world. But that's how it is, right?
Yeah.
So
Yeah.
good. That's so good. You're so fired up. I feel like that, so just like kind of rounding that out then, Karl, so I got asked this on Twitter, and I'm really curious your take. I put out this tweet about how I think Securitize put a graphic about how tokenization is like the next logical step for markets. And then, you could take it all the way back to like when we would like trade in coins, and then cattle, then coin, like kind of like the whole like history of money thing that every crypto person has like learned about, right? And then so now tokenized assets and tokenization of equities 24/7 is like the next logical step. And this guy Cooker was like a pretty prominent, like, I don't know, he's like a Solana kind of guy and had a lot of like big trader. And he was like, what do you see as the big obstacles for this? Like, do you think that this is just too early still? And I kind of responded I was like, I think it is a bit too early for this year to really see all this happening, but it's happening. Unfortunately, being early is often the same as being wrong. Karl, are we wrong? Like, is it too early for tokenization and tokenized assets and neo finance, or is it just the right time? Kind of talk to us about kind of like time frame. What are some of the obstacles that you're seeing?
Well, if you are going extremely long or extremely short, any short period of time, you are probably wrong. And so please exercise extreme caution. Don't, But I mean, look, if I said that we're wrong, then I'd be wrong for the past 10 years. You know what I mean? Like I can't emotionally do that. I think we are obviously right. We just have to have our eyes on the prize, right? We can't be like, okay, I'm in it for, we're building technology. We're building the social fabric of like a more efficient economy. Like this is the kind of stuff that is at a scale which is impossible to perceive and impossible to predict. Like talking about we can have the word, the global financial system, right? We can say those words, but to imagine the global financial system and all of its complexities is fundamentally impossible. In fact, even imagining a small segment of the global financial system is impossible. I would have to spend my entire life understanding little tiny intricate details. So like, of course, I don't know how this like the exact details of this massive Goliath, thing that is hard to quantify or even conceptualize how that changes, but I can absolutely identify one foundational principles that are first principally reasoned and that are true, such as the fact that we have the proper rails for the global financial system, and two, that I can see the movement. I can see the directionality, and the directionality is incredibly clear, and in fact, gaining speed and gaining, gaining legitimacy. And that is so it's like you can't get like lost in the sauce. You just have to remember, like, okay, we're here, we're moving forward, take one step at a time, and the future will unfold.
Yeah. I mean, I don't know. I thought my obstacles were regulatory and education. What's your take on that?
I think those are very similar, right? Like we need to make sure that the world understands what crypto is and what it can provide. And when the world understands what crypto is and what it can provide, then the regulations will be able to be perfect and, protect investors, protect users, protect institutions, eliminate waste and do good things. And I think it's like, we just have to talk about this stuff, and it takes time. It absolutely takes time. But we're here. We'll be here when it comes.
I think that market structure bill should be coming through pretty soon.
Yeah.
I mean, there's still a lot of debate around it, but I think that's going to unlock a lot of the floodgates for tokenized assets on chain, tokenized equities, et cetera, et cetera, et cetera.
Yeah. And one of the things that you guys announced like very recently was partnership with Succinct, bringing ZK deeper into the OP stack. I'm curious how these two visions link together. Hyper optimizing and focusing on RWAs. It's this big, watershed moment as more tokenized assets come on chain. Are institutions and fintechs asking for ZK to provide them some more, privacy and interoperability and ultimately accomplish their business goals as they tokenize more of their assets?
Yes, definitely. They are absolutely asking for it for all of those reasons. They also want the ability to quickly move assets from, a layer 2 to, L1. Their ZK is a real unlock for enabling people to essentially expanding the surface area of trust and making it far more efficient and fast. And so, of course, we actually designed the OP stack deliberately so that we would be independent of any individual proof system. So we obviously had to build on our own thing, built the Optimism fault proof system. And then we also worked with a whole bunch of ZK teams and, created some ZK proofs for the OP stack, and we're now bringing OP Succinct all the way into OP mainnet and the super chain. So it's very, very exciting. This is the beginning, and there's going to be a huge. I think we are like. I could go off on the proof system universe, but we have been cooking for so many years, and it is like finally coming to pass that we have serious ZK proof systems that are at a cost level that are reasonable for end users. And so that's a super exciting development.
And as you know, Andy and I have been in the space for a long time, and we went deep into the depths of the blockchain architectures, all the way down to the fault-proof systems, getting into the weeds about how these things are determined, differences between optimistic rollups, ZK rollups, getting into the weeds. Are these institutions getting that deep? Is it their engineering teams, their business teams? What is their vector through which? How deep are they trying to understand this technology?
They definitely do a lot of due diligence, but I would say that the way that we talk to crypto native folks and the way that we talk to the institutions as we bring them on chain is just radically different. Like when we talk to crypto folks, we're like, oh yeah, the ZKP combined with the TEE gets you the DA that you need. You know what I mean? And obviously that's not true. DA and
Be a battle rapper.
wildly different. But instead we have to talk about what is the value that we are providing to users. Right. And to be honest, that is a skill that we and the crypto industry would do very well to learn, because it's a little bit crazy the way that we talk about technology when we talk about the implementation details, because the problem is people don't understand the implementation details. And so you end up confusing everyone, and it's not scalable. So instead, we've been really focusing on talking about, okay, what are the aspects? What are the benefits? What are the downsides, right? How early are we in the technology? What are the tail risks? What are the, opportunities that we have for improvement? That is the kind of language that we're using to really express and candidly educate the world about what crypto provides. And we need to be honest and just like say what it is and how it affects people.
And what would you say are the top 1 or 2 things that we still have to improve to make sure that the technology is sound enough for these institutions to come on chain?
I mean, there's a long laundry list, to be honest, because
but just everything top 1 or 2 that you guys are focusing on.
All right, I'll give you 3. I'll give you 3. Scalability. We need to process far more TP, even though we have a lot. We still need to keep going. Latency, we need to make that really, really fast. Actually, I'm going to give you 4. Customization, surface area for customization. That is critically important because every institution wants a different thing out of their chain. Critical. And the final thing is fragmentation. There is way too many islands. We need interoperability between these chains. The entire point of the Web3, the upgraded financial system, is interconnectivity, liquidity, access, and sharing, and auditability protocols, etc. That is not real until we unify both the back end and the user experience. So that is 4 things, I guess.
Yeah. Karl, last thing for you. We recently saw yesterday Aave put a proposal to redirect 100% of Aave brand revenues to the DAO, which is effectively the token holders. Hyperliquid has obviously made a big splash in the last 18 months with regards to their tokenomics. Protocols like Sky have done an increasingly good job of doing buybacks from their revenues. I recently saw that Optimism also has placed a focus with regards to some of the super chain revenues, as well as revenues from your product line back to the OP token. I think it was 50% is what I read. Talk to us about the game theory and the kind of thought process around designing token models in this new regulatory regime. I actually think that I have a thesis that more top-down product and protocol decision makings is now a competitive edge in the current regime. Talk to us about how you guys are thinking about the tokenomics and just economics of Optimism, Aave, or just your general takes on how the kind of token equity unification and general shift to what I call the revenue meta is happening.
Yeah, I think we are seeing a maturation of connecting the dots and the loop for protocols and the ecosystem so that it is possible finally to have a contribution to the protocol actually, be incentivized in the ecosystem, be incentivized to use the protocol, to be a participant, to, improve upon it. And this is really just like a maturation of the space. And candidly, I think this is, one could have predicted this, way, way long ago. I think we had this crazy, we started out with what we're going to do is we're going to create decentralized and permissionless protocols that have economic flywheels that incentivize participation and usage and all of the different things that we want in the ecosystem. And then we, went through this, kind of rocky area. We were like, oh, actually, you know what we need to do? We need to put everything on discourse. We need to talk on discourse. We need to have usernames. I'm sorry, I'm just making fun of discourse. But like the point is, we had this crazy thing where we just were experimenting. And to be honest, that's really exciting and really great. And we were doing the thing, right? And that was like the end state. But now we are at a moment where we have the tools, we have discourse, we have the communities, we have the companies that are building on the ecosystems, and we are now getting to the point where that whole flywheel is able to connect. And it's still, it's still a few years out that we're going to, see the kind of realization of what it really means to be a decentralized protocol that is, aligned and like a full economic loop. We're still seeing that play out. But I think we are like, it's very obvious that we're making meaningful steps from basically kind of a little bit of crazy to now more tangible.
Yeah. Karl, man, appreciate your time and congrats on the recent work with Succinct. I hope the enterprise work is also going quite well. I'm sure it is. There's a ton of capital and institutional flows that want to come on chain. It's quite a weird time where inside of the ecosystem, it feels very slow and bear market and kind of apathetic. And then outside with the largest global, the world's largest capital allocators are just chomping at the bits to allocate, to figure out how to get their strategy down. There's like a whole global FOMO happening. Meanwhile, inside it's quite slow. So it's an interesting dynamic.
When it feels like this is the moment for opportunity, right? Like when the world is zigging, you're zagging, right? Like this is where we build heads down and actually realize the vision, because we are closer than ever to that happening.
Karl,
yeah.
Thank you so much, man. Have a great weekend, buddy.
All right. Thank you. You too. Bye.
Cheers, man.
Talk to you soon. Bye.
Karl's on fire. Absolutely on fire.
Yeah, Karl brings the energy. It's great to see.
Absolutely flying.
Certainly not apathetic over there at Optimism.
Absolutely flying. Guys, we're going to take a quick break. We'll be right back in just a sec. We got 4 more guests lined up. Big show today. We'll be right back.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game. Go anywhere on chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Havachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Looking for yield that stands out? Infinify gives you just that. Deposit stablecoins and earn far more than the current savings rate. Infinify is a battle-tested, reliable DeFi platform that is ready to go. Head to infinify.xyz. Open, stable, borderless. Frax is building the next generation of stablecoin infrastructure for the digital finance era. Visit frax.com to learn more today.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game. Go anywhere on chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Hibachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Looking for yield that stands out? Infinify gives you just that. Deposit stablecoins and earn far more than the current savings rate. Infinify is a battle-tested, reliable DeFi platform that is ready to go. Head to infinify.xyz. Open, stable, borderless. Frax is building the next generation of stablecoin infrastructure for the digital finance era. Visit frax.com to learn more today.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game. Go anywhere on chain instantly with relay.link. Relay is closing in on $10 billion transferred. Go to relay.link to bridge your assets now.
Talk to AI like your lawyer or your doctor or your therapist. Yours private. All right, guys.
Tomasz is leaving.
out.
Yeah.
Man, he is.
I had the pleasure of meeting Tomasz in San Francisco during the University of California Science of Blockchain conference.
Okay.
Super nice guy, was very forward thinking, and was also very focused on AI as one of the forward drivers of Ethereum's like activity.
Yeah.
And so, look, people are calling this bullish. I think this is positive. I mean, he got in there.
Yeah, he did what he needed to.
Exactly. The Ethereum Foundation was in shambles last year when he took over.
Yeah.
I mean, we remember that there was a significant competitive spirit taking place between rollups and infighting was at an all-time high.
Yes, it was.
Sentiment around Ethereum was so low. And I think Tomasz was around when Ethereum jumped almost like in the course of like a couple weeks. It jumped from like 1,500 up to 3K or something like that.
Yep.
And so, yeah, I tend to agree. I think Tomasz did what he needed to do, and now he's handing it off to people that are internal, Bastian Wu, who will serve as interim co-executive director along with the rest of the organization.
Yeah.
And
I just don't know if I can call this bullish, honestly. We literally have the EF is full on. They had this bullish reversal, but let's just put it this way.
Well, Tomasz led the bullish reversal.
ETH Denver is going to be really interesting. Vitalik one-shots L2s, and then Tomasz leaves the EF. We got Bastian Wu as the interim co-executive director, effective immediately. Tomasz was credited with strengthening the EF's operational focus, enterprise outreach, organizational efficiency. As you said, Rob, led the bullish reversal. Now Bastian brings a lot of deep internal experience. They've been there for a while, previously involved in grants, enterprise initiatives, operations. And the way that the Ethereum Foundation is framing this is as a moment to refocus on core development and long-term stewardship of Ethereum's technical and social layers. I'm a bit worried as to why he left. Was he forced out? Did he leave on his own accord? Was this planned? How did this kind of come about is kind of the speculation that I would want to get into.
Yeah, so let's see. He said in his most recent tweet, this was 30 minutes ago, just to clarify, based on some messages I'm receiving, I am not planning to take any breaks.
Yeah.
I'm finalizing the transition by the end of February with the EF and then building on Ethereum from the 1st of March. We'll see.
Building on Ethereum.
That's what he says, starting the 1st of March. And, people are asking, how much of this was related to Vitalik's recent tweets. But it sounds like he's going to be building a project. And remember, Tomasz comes from Nethermind, which is, like the largest and most significant Ethereum client. And so I believe he's still got a stake in Nethermind. He's still significantly invested in the Ethereum ecosystem. I don't know what he's planning on building next, but it would be interesting to hear more specifically why he chose to leave. If he was chose to leave or if he was forced out.
I think they're gonna have some. I think they're gonna have some AMAs. He's gonna also be at ETH Denver.
Yep.
So I would expect to see him there and to have him be talking about it there. This is just like a lot going on for Ethereum from the kind of like the higher powers. Like you've got Vitalik and his L2s. You've got Tomasz leaving. I don't know, man. It leaves me with wondering kind of where this all shakes up.
So in Tomasz's blog post, he says, I may continue traveling and working with local communities and helping businesses build on Ethereum. Keyword there is may. He does say, I plan to act more as a core dev, a hands-on product builder, and among other things, work on the agentic core development and agentic governance. So like I said, Tomasz is very focused on AI. I have a feeling that's where his true passion is. He did step up, and was intimately familiar with Ethereum, being at Nethermind, founding that company.
Yeah, it's just one-shotting people right now. So hard.
Look, this is possibly related to, like you're seeing a lot of people leave crypto. Some people are getting calls like, hey, why are you still building in this weird ecosystem? Other people, I think, are looking at AI and they're thinking to themselves, this is a once in a generation opportunity, once in a lifetime opportunity to work on something that could be innovating at a faster pace than crypto. Combine that with, people feeling like it's being co-opted by institutions. I can see why people are leaving to AI. But ultimately, these things do intersect. So Tomasz is at a really interesting crossroads here.
I mean, I agree. I do think it's probably partially I bet what he's gonna come out and announce in March is going to be something with regards to using AI on Ethereum.
Yes, I would imagine so.
You heard what Karl just said from Optimism about agents coming on chain to it seems like the no block space demand problem is the thesis here is, we're gonna have a ton of demand from agents.
Oh yeah. I think blockchains are almost like the spam protection for agents. And the reason being, like, if you have, why microtransactions might be like significantly important is because if you're in a subscription model and you can pay $30 to ping an API a gazillion times, that could end up costing the subscription service more than $30. And then they're not breaking even on that anymore. And so you end up needing microtransactions and micropayments to appropriately charge agents for these services. Which, just to sum that up, it requires them to be on chain, the services themselves, and the agents paying for them.
Yeah, it's just, the internet doesn't have a microtransaction layer right now. Like there's not a payments layer to the internet, which kind of feels wrong.
Well, you can't use a credit card transaction for a micropayment because the servicing and the settlement of that transaction ends up costing more than something that would cost 0.0001 cents.
So you're talking like less than a penny transactions.
Yeah, but those add up because gazillion. Think about how many tokens are generated by these agents. There's not a payment mechanism or rail to support a transaction that costs that little. That's why a cent is like the lowest denomination of a currency.
Yeah.
A Satoshi on a Bitcoin goes to 8 decimal places. So you've got a little bit more granularity. Ethereum, I think, goes actually even more than that. And so in stablecoins, you can identify 12 or 16 decimal places as well. And so I think that is going to be the Sybil protection or the spam protection for agents as they need to get metered and they use these APIs and these services. Yeah. They're going to need to I think these things are going to need to happen on blockchains because there's not anywhere else to facilitate this type of service.
I saw this tweet. It was like agents chose base. And then it was like, they like base amplified it all out. It was like, why did the agents themselves choose base? It was an interesting tweet. Like the agents had the autonomy to select which blockchain they wanted to operate on.
That's a big look. We know that once liquidity and transactional activity occurs on one chain, it starts to build up.
Yeah.
Liquidity effect, liquidity begets a liquidity. More things are going to flock. You have the wealth effect and the network effect. The one chain that ends up winning agent transactions, probably not just going to be one, but if they really did choose base in that regard, that is huge as that spirals upwards.
I don't know if they exactly chose base, but like, you know what I mean?
I do. You're saying that like there's this organic, like there's a plethora of chains out there. The fact that a lot of agent activity is happening on base, the question is why?
Yeah. Yeah. Yeah, man. Man, kind of a green day in the market today, huh?
Yeah, I mean, we had some macro news. Inflation came in a little bit lower than expectations.
Is that what happened?
I'm not saying that's why the market's going up. I'm just saying that's one thing that happened today.
Okay.
Um,
I feel like inflation's super low.
I think it's 2.4%. The expectation was 2.5. Let's see. U.S. Consumer prices rise 0.2%. Estimated was 0.3.
Yeah.
January consumer prices rise 2.4. Estimated 2.5. CPI 0.3. Estimated was 0.3.
Yeah.
So pretty much right at estimates, just one tick below. And then there was also more tariffs got wiped. The U.S. reached a deal with Taiwan about
Nice.
see.
It is funny how
US
like
inflation falls to 2.4. United States signs trade deal with Taiwan, cutting tariffs to 15%. In return, Taiwan will remove 99% of trade barriers on U.S. and purchase $84 billion worth of goods.
that sounds bullish.
You were saying?
No, that sounds bullish. I was just saying that it's funny how like often these announcements align with like different levels that people will call out on charts as well. Like they'll
Makes you feel like we're in a simulation.
yeah, it really does, to be honest. All right, let's just move to Rob and I, and let's just vibe. We got another guest in 7 minutes. We got the OpenTrade fellow who is actually a really interesting fellow.
Tell us about him.
Well, he's got 700 followers on Twitter. He's a huge Bitcoin guy. I think he's pretty early into Bitcoin. He's the CEO and co-founder, David.
Yep.
And yeah, I mean, they're building out a massive like RWA infrastructure product, basically.
Yeah.
And they're focused on LATAM, they're focused on different regions. And again, it's these products that were like kind of boring for the market for the last, I don't know, year, 2 years that are now becoming like actually relevant and generating revenue and becoming like what people want to pay attention to. It's funny how like those things shift. Like every 6 to 12 months, you get these different shifts.
It's very similar to the wealth effect or like network effect, but it's conceptual wealth effect. It's like the gravitas of working on something. Take AI. It's why you get this intellectual brain drain of people that end up working in that space because conceptually it holds so much more real estate in people's brains. They feel like anything that they're doing that's not that thing ends up being a waste of time. And so you end up getting a lot more people paying attention and spending time on that thing. And then
so it's just like a psychology thing.
I think it's a psychological flywheel. It's like a mass hallucination, like a collective consciousness thing that people end up doing more and more of that thing as it grows more and more in the zeitgeist. So AI obviously gets a lot of that. We're seeing like, who would have thought Optimism would be like an enterprise first? Like, like that, if that's not a sign of the times.
Yeah. Dude, I got to set up Claudebot, man.
Well, we're going to be in NearCon. I'm planning on asking people smarter than us to set it up for us if they would do it.
You sent me that one tweet. How
Yeah,
to set up Claudebot like safely, basically.
Yeah, that was a like rather non-technical way to set it up. From my conversation with George, the chief of product at Near, he says, treat it as if it's a new employee. basically put it in something like a container, like a Mac Mini, like a body, essentially embody it in something that does not touch any other hardware. So you don't really want it in the cloud because that is much easier to penetrate. You put it in its own hardware and you give it access to its own things. Don't give it access to your Telegram, Gmail, email, Twitter. Give it its own Twitter, its own email, its own Telegram. Give it its own Slack, Notion, and treat it as if it's its own employee. Otherwise, if you give it access and credentials to your thing, then it can start acting very weird.
So you want to make a new Telegram account for Claudebot?
It'll make its own Telegram if you tell it to.
You just like tell it to make its own Telegram in terminal?
Its own, yeah. And I think there's ways that you can interact with it without, like you don't need a terminal anymore. It can just do natural language.
Wow.
But yeah, it can access the internet like us. It can go create its own Telegram. You can give it a phone number.
Wow.
You can do all these things and it's basically like it's its own digital person.
Wow. The clankers are clanking, huh?
The clankers are indeed clanking. One of my best buys this bear market has been Clanker.
Clanker?
Yeah.
Is that a token?
It is. It's on base.
Oh my gosh.
And I think it was like the first token deployed by, let's see, clanker.world.
Oh yeah, I remember that. They got acquired or whatever.
Well, yeah, it was part of Farcaster, and then Farcaster got acquired.
Oh, right.
Clanker is an autonomous agent for deploying tokens. So this is like the launch pad. Currently, users may request Clanker to deploy an ERC20 token on base by tagging it at Clanker on Farcaster. So yeah, you can tag it like an agent would use Clanker to deploy a token.
On another note, Rob, Binance fired their compliance team who uncovered Iran sanction violations late last year.
Yeah.
How about that?
Give us an interpret. I don't know how to interpret that one.
I don't know either. The comment section is about to be crazy. That's not very compliant of them. That's like the US going after Edward Snowden. Not a raise or a promotion, question mark. We see the bad, quote unquote, but we close two eyes. Jeez. Somebody tagged the FBI in the comments. Wow. That's pretty bad though. FedEx is joining the Hedera Council. FedEx will run a network node and take part in governance. Oh my God.
The world's coming on chain, brother. This feels like a very, you know how 2021 kind of felt like 2017 and then, you match up 4-year cycle to 4-year cycle.
Yeah.
This feels completely different from a sentiment perspective. Like even though we're in technically this would be 2 years after the halvening, right? So this would be year 1 of a new 4-year cycle. If we're in a 4-year cycle paradigm, which maybe we are, maybe we're not. But this does not, I guess this would be the most weird. I don't know, because you've got some like late stage bull run.
I know, so much of it.
But at the same time, prices have already depreciated and we're technically in year 1 of this entire cycle happening over again.
I know, man. And like all the news is still like, it's still just like, it's so weird, man. It does feel like bull market news somehow.
Yeah, it does.
And it's just not. And like people are still in denial. Like we're gonna get a bounce probably, and people are gonna be calling for the bottom. And like maybe the price has bottom, but like you guys are gonna have time. That's for sure. You're gonna have some time to do whatever you want to do down here. I think that's the reality.
White House official Patrick Witt says there are trillions of dollars in institutional capital on the sidelines waiting to enter the crypto market.
Based off like the Clarity Act or the market structure bill getting passed or what?
Just them saying more bullish things every once in a while. They just, like Trump talks about the market goes up most of the time. Besant says something about crypto, it does a little something. They just continue to make sure that people realize that they're going to do something to reverse the trend.
You think Trump must be down a ton on WLFI and all his ETH buys.
I don't think Trump had a cost basis on WLFI.
Yeah, I'm not sure he had cost basis ever in crypto. The guy's just been accumulating. Did you see Pam Bondi's clip yesterday of her like going after Trump?
She was going after Trump.
I didn't watch it all, but I think she was basically trying to say that like the Epstein files, we've had enough of it. And like look at all this other things that are happening. And then Beeple made a really cool graphic about it.
Yeah.
It's like Claude Code, Melania Coin, Donald Trump Jr., World Liberty, tariffs, all this stuff. And it was just like, I think some of the like traditional politicians are a little bit shook by the market, focus from Trump.
Oh, and
like
on Epstein?
No, like Epstein is like this thing that's happening, but Trump is so focused on the markets more than anything. Like I think the over speculative nature of this new administration is getting under the skin of some of the people that have been around who haven't experienced a regime so oriented around financial speculation.
Yeah. Well, look, I think if you focus on domestic, okay, let me try to sound this out, because I tend to think that the domestic economy is like, and global economy is part of this as well. But if you focus on domestic health of domestic economic health of citizens,
yeah,
you would think that would help a lot of social constructs as well. Meaning like if inflation's low, people can afford groceries. They feel like their social mobility, they're kind of moving up in their wealth. They're probably going to just be friendlier. They're probably just going to like take it easy, have a better time, go on vacation, like afford to do things and just be less like mean to others and like less civil unrest. So if that theory is true, then yeah, like enriching one's population would be one of the root, right? And my math brain is always like, let's try to reduce this to most, kill the most birds with the least amount of stones.
That is a very simplistic way to look at it. But unfortunately, the politicians or the folks that care about or that are, not so pleased with the regime, they don't know exactly counting pennies. So, it's a bit of a different type of people that are a bit upset about the behavior there. So anyhow, that's enough politics for today on Rollup TV. Let's get back in. We got David Sutter, the co-founder of OpenTrade. He's going to be joining us here imminently, talking about stablecoin yields, talking about the work that they're doing in the neo-finance space. Let's get Dave up and let's get the show on the road. Glad to have Dave back on the show. First time, actually. Dave, welcome back. Good to see you.
Hey, guys. Great to be here. How are you doing today?
Fantastic, man.
It's a pleasure to have you here.
Dave, what's the lore behind your Twitter handle, man? You've got this Dave BTC. Give me big OG vibes.
Yeah, I guess we could be considered OGs. So my co-founder Jeff and I, we got into Bitcoin when we were in college in 2012. And so you'll see that handle's actually from 2014. So I've been a Bitcoiner for over 10 years now.
Andy, we just got to college like a few years too late, man.
I realized that we were like too young to be a part of the Bitcoin elite, just in time to be a part of the Ethereum elite, too old to be like the Zoomers who are going to be clodbotting their way to like a 9-figure business. So like somewhere in between there.
Oh man, there's a lot of fun stories there.
I bet.
Probably not appropriate for this venue, but maybe over a beer.
Let's do it, man. We'll save those for another time. Well, I'd love to hear a story that you can tell us, maybe how you started OpenTrade and generally, maybe some things that happened after college once you embarked on your entrepreneurial journey.
Yeah, absolutely. So Jeff and I have sort of followed the arc of tokenization and stablecoins. So we started it on Bitcoin in college. We helped launch one of the first dollar stablecoins, one of the first real world asset tokens, then helped build a sort of through the phase of early tokenization. So we helped build a consortium of 50 banks that were doing tokenization for corporate lending and trade finance, and then wound up back at a firm called Sutter, which was a joint venture between Coinbase and Circle that founded and governed USDC, which was wound down as a part of Circle basically acquired that and USDC stands on its own now. And somewhere in there, we decided we wanted to do a venture in the stablecoin space and focus on yield. And so it's been a wild ride over the last 12 years, kind of from the Bitcoin days. You guys mentioned Ethereum, watching that, multi-purpose permissionless blockchains through to tokenization and their adoption in mainstream financial services and regulated industries, through DeFi summer and the resulting stablecoin boom. And here we are today, right? We're moving $50 trillion on chain with stablecoins in 2025. So yeah, would love to talk about any and all of that with you guys.
All right, Dave, where's the yield coming from? Your new 15% stablecoin yield product hedges Solana staking with perps. Why is this a better product than RWA or DeFi yield? Or maybe we can just start a little bit easier. What is the product suite here of OpenTrade? And talk to us about some of like the vault strategies, kind of what you guys are doing there.
Yeah, so the way I like to explain OpenTrade is with an analogy. So if you look at Stripe as a business, one of its core lines is it allows e-commerce businesses to embed checkout in their apps and services, right? These e-commerce businesses, they don't have that competency. They don't want to build their own checkout experience. So they use Stripe and they have checkout. We do the exact same thing for yield. So we work with neobanks, exchanges, staking providers, custodians, payments companies, and they use OpenTrade to embed yield products in their existing apps and services, both to manage their own treasury cash, but also allow their users to earn safe, predictable yield on their stablecoin balances. To your point, I love the way that you asked that right up. Where's the yield come from? We started the company directly in the wake of FTX and saw, firsthand the BlockFi, the Celsius, kind of the disasters that there were. And so the day one ethos of this business was to do the opposite of that, really to build a platform that was safe, reliable, secure, transparent. And so all of our yield generation strategies are run through a bankruptcy remote structure with regulated asset managers and service providers, and maximal transparency. The product lines are diverse. So we have products across publicly traded real world assets, public fixed income securities, private credit. We have the crypto native line of business that you alluded to, which is a delta neutral Solana staking strategy. We have a bunch of DeFi strategies. We've launched a DeFi native product called Sierra, which is a permissionless liquid yield token. And so our job is not to be really opinionated on the market. We want to provide our customers with the broadest tool set possible so that their users and their treasury can build products that kind of span the spectrum, the risk curve, liquidity, duration, tenor, exposure, target returns. So our platform runs the gamut. We have over 45 different counterparties and venues that we connect to, and through that are able to offer hundreds of different strategies.
Incredible. According to RWA XYZ, you guys have 100 million in distributed asset value. Maybe it's more than that or less than that, but upwards of 100 million. Almost 90% of that is on Avalanche. Curious why you guys chose Avalanche as a key partner to deploy these strategies.
Well, that's actually a great plug. I'm wearing my favorite North Face right now, which is an Avalanche North Face. I don't know if we can get that in the screen. Look, we made a decision very early on that we got in touch with the Avalanche team. Technically, it's very good, right? It's fast, it's efficient, it's EVM compatible. But really on the business development and sort of community building and strategic partnership side, they've been fantastic. And so we've really gone down into Latin America together and working with them, shown that stablecoins and stablecoin yield can be a real product for real people. Not that crypto, I'm an OG, right? I'm a degen. And so I'm not saying I'm not a real person, but these are remote workers, savers, travelers. People are using stablecoins to save and earn yield. And that's kind of the spirit of our partnership with Avalanche. And we just haven't found a reason to go anywhere else. They've been fantastic.
Yep. We had the head of tokenization from Avalanche on. Her name was Olivia. Maybe you guys have worked closely together. And she kind of laid out the spectrum of tokenization in this current era. She took us through kind of the most the easiest one to implement right now is kind of the wrapper, the regulated wrapper around an SPV. And then you've got kind of like a hybrid approach that is backed one-to-one. And then you've got native issuance, which is a little bit far-fetched. Not a lot of teams doing that right now. Where do you guys fall on that spectrum? Is it closer to like, okay, this is something that's here and now, or is it restructuring everyone's cap table?
So that's a really good question, number one. So there is a part of the industry right now that is trying to, and it's a good fight, rewire Wall Street with the public and permissionless blockchain. And so really the work that they're doing is solely focused on bringing assets on chain. That's not our job. Our job is as an infrastructure provider to those fintechs so that they can earn yield regardless. So we're not, I guess what I'm saying is we're not idealistic. Like we have on-chain products, off-chain products, DeFi products, crypto products. And so it depends on the product. We have some products that follow the first model that you alluded to, right? We have an SPV and there are vaults that basically issue tokens that represent interests in the investment activity of those SPVs. We have hybrid models. We also have partnership with direct issuance. So we have some products where debt is being issued directly on chain, and that's where the yield's coming from. And so our model supports all three. I have my own personal thoughts and opinions after working with large financial institutions for close to 10 years on bringing assets on chain and the challenges and opportunities there. But for us as a business, we're unopinionated on that.
Well, it would be great to hear, because you guys span a wide breadth of this spectrum, to hear the pros and cons about where someone may fall. Like, we consider this an educational channel. There's plenty of founders, builders that are considering coming into the space. Give us a sense of what it takes to build at some of these different levels.
The first thing I'll say is that I think the number one objective for any company or anyone learning about this space is to focus on the end user and the problem that you're solving for them. And most of the time you'll find that they either don't know or don't care about whether it's a wrapped SPV or it's directly issued on chain. They want to know, how are you improving the way that they go about their day or the way that they manage their financial lives? The nuts and bolts of it really depends on the asset, the venue, the geography that you're focused on. I think that what we will see, and this is what you can expect, is there is a lot of great work being done for these things to be issued natively on chain. And that's a really important step forward, because you're going to get 24/7 atomically swappable assets and investment activity around the world. Like you have NASDAQ, or I think maybe the New York Stock Exchange. One of them's launching a 24/7 market that's going to be settled in stable coins, right? That's incredibly exciting, and that helps us. But I think the thing I would say for anyone that's thinking about building in this space is to be very pragmatic. Like, I wouldn't make it your mission to wait for Wall Street to come on chain. Whether it's an SP, there's a variety of different ways that you can do this, and you can skin the cat, so to speak. And whatever way is best for that first thing that I said, what is the problem that you're solving for that end user? We have very specific ICP. We know what they want. We know what they need. And that drives our design choices in terms of how we structure everything in the back end.
Yeah. I think that's something that we firmly have realized is that this step of tokenized equities on chain, or different types of money market funds or private credit funds, et cetera, even just like, being able to trade silver and gold on hyperliquid as an example. These are it's like the intermediate pragmatic step of tokenizing all assets, and then eventually getting better assets on chain to speculate on as well. That's kind of like the phase that we're in right now. It was like, I think the industry was trying to skip that step and go straight to having just creating this entirely new system. Seems like this intermediate step is also shaking out a lot of believers in the space, though, who kind of had that early cypherpunk innovation and ideas. For us, we're kind of calling this neo finance, right? It's this convergence of legacy finance assets without the T+2 settlement times, without the opaqueness, centralized custodial kind of operational capabilities. And then it's also DeFi without seed phrases and without a clunky UX and without having, losing your assets to an exploit, and having a forgot password button, having a customer support agent, et cetera, et cetera. So we're kind of seeing this convergence, calling it neo finance. I'm curious kind of what your take is on this convergence, on this idea of neo finance from your perspective. Like, what does this really look like? What does this mean?
Yeah.
You, Dave?
So that's a really good question, and I share your guys' view of the world. Let's talk about kind of the historical arc and where we're at. And we're not going to go back further than Bitcoin, but we have Bitcoin, right? And really, the first inklings of tokenization were something called colored coins, where people were using little pieces of Bitcoin to track assets other than Bitcoin, right? And using the OP return in Bitcoin to say, this is a barrel of oil, or this is $1, or what have you. That kind of kicked off a wave, let's say from 2014 to like 2020, where the finance side of Neo, right? So the non-crypto native, the non-degens, they approached the problem by saying, we don't trust public and permissionless blockchains. We're going to create these private consortiums and use private chains. And we're going to build our own little siloed networks, right? And there was a lot of time and money spent on that. Really, there was. Like, every bank in the world focused. And what it did is it taught them a lot about, it got them comfortable. So I don't think this was a waste. 2020 onward, you started seeing institutions get comfortable with public permissionless blockchains. So they kind of said, you know what, these private networks, they lose all the network effects and they lose a lot of the value because of that. And so you start seeing BlackRock and Franklin Templeton and Wisdom Tree, and both on sort of the tokenization side, but then also like the Bitcoin ETFs and the DATs. And so now where we're at, basically, as you already pointed out, is the institutions are comfortable with the tooling, and they're finding ways to adapt their business model to incrementally adopt public and permissionless blockchains for mainstream financial use cases. And the next wave beyond that will not be just recreating existing products on chain, but it will be creating entirely new products, right? Because now we have 24/7 liquid markets. Anyone in the world with internet access can save, invest. We have this whole move away from bank accounts to digital wallets, and we can talk a lot about that. But I think the wave that we're at right now is still the convergence of institutional finance, figuring out how to do the existing products and services on public and permissionless blockchains. And as there's comfort and adoption there, you'll start to see them innovate and launch entirely new products and services. Like a DAT is a good example of that, right? That's a completely new sort of business model. That didn't exist until very recently. Whether it's good or bad, we can argue that. Yeah, anyways, I hope that makes sense.
Your view of the world sounds very similar to, we had Mike Cagney from Figure, and he was at SoFi as well. And he was describing similarly how digital wallets, not financial super apps, are going to be the way in which we will navigate the neo finance world. And so, it makes actually a lot better sense when you put it in the framing of a transition away from bank accounts. And so you actually believe that we're going to transition away from, like, right now, checking and savings at a brick and mortar bank, we'll get a quarter basis point, if that, right? And so part of this neo finance thesis is that we're going to transition into a high yield savings environment via neobanks. And it might actually be opt-in, right? So if I don't want the bank to lend out my money, I don't have to get any yield. If I go and, I go to a bank, I get no yield, but they also, lend out my money. And so in this new format, I can opt in and I can get a high yield. And you think that this is going to be a transition away from bank accounts into something like the digital wallets? Just fill in more details of that picture that you think is going to develop.
100%. I think that's happening already. MasterCard did a study, I think 2 years ago, where they found a third of consumers in LATAM had made an everyday purchase with a stable coin. It wasn't happening through banks, right? Mm-hmm. And so I think that's happening. Let me kind of deconstruct that a little bit. On stablecoin specifically, anyone that's listening, I'd urge you to just go to Google and type in narrow banking. So stablecoins is really a rediscovery of an old concept of narrow banking, where the existing banking system, being fractionally reserved, is inherently fragile. And actually, it turns out academics and financial professionals all along have been saying, people should basically have the option to opt into that model, but that there should be these other institutions that actually exist only to move money, right? They're utility providers and they're not fractionally reserved, which makes them a lot more resilient, right? That is essentially the core financial structure of a stablecoin. It is a narrow bank, right? It takes in deposits, it issues stable coins, and it is not fractionally reserved. It invests only in short-dated U.S. Treasury securities. And then on the yield generation side, you can then opt in to do that, right? Where you can choose your risk tolerance of, I want to invest in things backed by treasuries, or I want to invest in things backed by private credit, or I want to invest in things backed by, you have more granularity over what your account does, what your institution does with your money. And that's what you're seeing on the neobanking side, right? So you have this kind of like a rediscovery of old concepts. That's actually fairly threatening to the existing commercial banking model. That's why you've seen the ABA come out and really just go hard at stablecoins and yield on stablecoins, and saying on paper that there could be up to a 30% deposit flight from existing institutions. If that's not an endorsement of how good this product is, I don't know what is, right? And so anyways, that's that trend of stablecoins as the new digital internet native neobank or narrow bank, and then neobanks providing yield as the sort of new opt-in model to high yield savings, where people aren't just getting 25 basis points on their checking account in exchange for that bank making risky illiquid loans and doing maturity transformation and lending to, you know what I mean? I think that challenges a lot of the way that the current banking system is.
And I mean, that's why they're so against the market structure bill as it stands with regards to yield being
100%.
able to pass from stablecoins to holders. Dave, as we kind of come to a close here, what's the 2026 outlook for stablecoin yield on chain? Obviously, Trump is going to try to bring rates down in the U.S. This will directly affect the likes of Tether and Circle dramatically from a bottom line perspective. We will also have seen speculation kind of dry up a little bit in crypto, meaning that the yields have came down, that the desire to borrow is less. Yet still, I've seen incredible yields on some different vault products. What's your take on stablecoin yield for 2026?
I'm incredibly bullish on it. I think that rates may come down, right? We don't have a crystal ball, but when they do, it's relative, right? So the rates for everything come down. And so basically people's expectations around what they can earn on idle cash is going to be readjusted and will need to be readjusted. And that will impact DeFi money markets, that will impact TradFi money markets across the board. But the core demand for stable coins will continue to grow. And in line with that, the core demand for yield on idle stable coins will grow in line with it. I don't see a world where people are like, oh, actually, I'm okay with 0%, right? We know they want stable coins as a global internet native permissionless dollar. Like that is an unstoppable force. The genie's out of the bottle there, right? And as that marches on, so too will the demand for yield, regardless of what the macro environment is, right? It might change the way people think about where they allocate those stable coins, but the core underlying driver of I need stable coins and I now need yield on those stable coins is unstoppable in my opinion, and is all weather. Doesn't matter the macro conditions.
David Sutter, co-founder of OpenTrade, thank you for spending some time with us today. Really enjoyed this segment. Hope you guys had a big year. I think stablecoin supply, we estimate about a 40% year-over-year growth, hoping to get closer to 50 or 60%, get closer to that $1 trillion total dollar mark. Thanks, Dave.
Andy, Robbie, thank you. Have a
Appreciate
great
it,
day.
man. See you next time.
Bye-bye.
Alrighty, talking about stablecoins, we've got Rune Christensen, the co-founder of Sky, talking Sky, USDS, buybacks. I think they projected a $600 million revenue year from the USDS stablecoin, as well as a doubling in the USDS supply. That was a great conversation with Dave. Again, like very much a bit more on the legacy finance side, but that is the way that the language is spoke, and that the kind of growth vectors, the thought process, the mental models, it's all kind of from that lens. So
I
excited.
mean,
Yeah.
Yeah, as we can go ahead and send Rune in whenever he's ready, but I really am enjoying these conversations with tokenization partners and RWA partners because I think, these are new conversations and it's a new language, right?
It is.
And so we're gonna chat with Rune here in a moment. We're gonna bring him up, and I think we are now closing the gap between these two worlds. We're
Yes.
seeing the integration in real time, and I think we are now drawing closer between one common language between legacy finance
Correct.
and DeFi. This is becoming this neo finance language that I think is a blend of both of these, and we're just squeezing that gap until it no longer exists. So why don't we bring up Rune and we'll get an update on Sky as a driver of neo finance. Rune, welcome to the show, man. Good to see you.
Glad to be here.
Hey, Rune. How's Hong Kong, man?
Oh, I'm not in Hong Kong. I'm at home in my basement grinding.
Nice. I thought I
Let's
saw
go.
a video of you in Hong Kong or something.
Well, I was in New York and doing a whole bunch of talking to TradFi institutions and allocators and all of that.
What are they saying?
Well, they're all about stablecoins
That's
and
for sure.
tokenization. So they're happy to talk to me.
Yeah, man. Well, coming up now as the third largest stablecoin in the digital asset industry, also having recently released your $600 million revenue projection for 2026, as well as a potential double in USDS supply. I think it's been maybe like 4 or 5 months since we last spoke, Rune. Catch us up. What happened in the end of Q4? Obviously, we had 1010 into the beginning now of Q1. What changes have you made at Sky? Catch us up, man.
Yeah, I mean, look, so Sky actually has probably the best momentum it's ever had. So we're not exactly seeing a bear market or a crash or anything like that. In fact, it's been really good for us to have this like renewed focus on fundamentals. And yeah, I mean, so since we last spoke, we finished last year with Sky doubling almost the supply of USDS. So we're like right now it's at like 9.6 billion. It started the year at around 5 billion and ended the year around 9 billion. So that was like really good growth. And then a total revenue for the whole last year of 338 million, with 96 million of that used for buybacks. So yeah, I think like financially, the protocol has really proven itself. And then it's just the beginning. So I mean, the thing that's driving Sky's growth, in addition to just like the fundamental efficiency of USDS and the fact you can get the Sky savings rate at 4%, which is just the most efficient, best risk-adjusted return in the space. But it's also being powered by the Sky agents, right? Like Spark, Grove, and we've had some new ones launching, including OBEX. And this is just going to continue to grow, to launch and basically grow the momentum of Sky.
Yeah, man. I mean, I think the market is kind of catching up, but is still a little bit behind on what's happening. And we've been calling this kind of convergence here: neo finance, legacy finance, DeFi coming in, happening. Stablecoins obviously being a big part of it. When it comes to these expectations for growth, right? So 338 million last year, looking at over 600 or around that 600 mark this year. What is driving that growth in terms of the pure revenue projections, as well as the USDS growth in terms of getting that thing over 20 billion as projected? What's driving that? Who's driving that? How is that going to happen?
I mean, the great thing about being the world's largest decentralized yield-generating stablecoin is that there is now more than 300 billion in stablecoins out there that's not earning a yield on stablecoins that simply don't pay a yield to people that just have dollars, but their capital is completely inefficient, right? And someone else is getting that yield. And that just results in this sort of structural inflow that's constantly happening to USDS because it's the biggest. So it's sort of the default place for capital allocators and for this capital to go. Because look, capital just wants to earn a return. It doesn't want to sit earning zero. It wants to be efficiently used. And USDS is still just like getting started and still just getting proven, right? I mean, it launched a little more than a year ago. So there is just this constant passive inflow. And that's definitely something that, in the Sky Frontier Foundation, which is the organization that made this projection, where we're expecting this sort of passive inflow effect to actually accelerate as USDS just gets more and more lindy and gets, older and more proven and more widely integrated in the space. But the really sort of active push for adoption comes through the Sky Agent network, as I was mentioning earlier, right? You have something like Spark, right? Spark is this sort of its own right, very established DeFi project. Like they're the second largest lending market in the world. They have I think around 3 billion in TVL right now. And they're like really competing heavily in onboarding users onto like USDS directly, but also like various products that are powered by USDS, such as SUSDC. So you have this you have basically all of this innovation and all of these parallel projects and teams executing on the overall growth strategy that benefits Sky as a whole, but also benefits these individual projects. And then with Grove and Obex, which are like the two new big ones that have come live, and basically Keel, which is another agent that's launched, and basically other agents coming up in the near future from Sky. All of this is just gonna like really compound this momentum.
And so each of these things are sort of stars in the Sky ecosystem. And at a high level, they're aligned incentives between these stars, ultimately back to the Sky, kind of home. But talk us through the game theory of how you're able to do that and align these different projects. Is it through buybacks? Is it through the savings rate? Generally, what are some of the underpinnings here of how you're able to align incentives between all these stars?
Fundamentally, the stars are built on the rails of the Sky protocol. So they're just sort of fundamentally like inside the framework of Sky and follow the rules that is basically set by Sky governance. These rules are then like very, very clear and very reliable, right? So basically there's like a basic set of rules around things like as a star, what's the cost of capital, right? When you borrow from Sky. So when Spark, they go and find some kind of like a really good source of yield, or Grove, they onboard a new RWA, such as JAAA, right? Just the first ever tokenized CLO that Grove onboarded, and that they then deployed $1 billion into. But basically, so when they do this and they find a good source of yield, and they they basically get to develop some kind of outperformance through this new source of yield, that outperformance goes to the star, right? So Sky just gets the base rate. Like Sky gets like the basic return. The star gets all the upside, but the star then also has to do what's called credit enhancement. So basically put up extra capital to make sure it's still safe on the Sky side. And then on the stablecoin adoption side, essentially the alignment of incentives is through effectively a referral program called the distribution rewards. So every single time Spark, they bring users to USDS or to the products like SUSDC, and the same for Grove, right? If they bring institutional users on board and so on for all the stars, the users are super happy because they get 4% on their capital, which is the best rate available in DeFi, right? With really good risk-adjusted return. But on top of that, the star basically gets this distribution reward as a referral fee, just as like profits for them to basically make that connection. And this is like a very scalable, very parallelizable model where the stars are paid if they deliver results, right? If they don't deliver results, they don't get anything. So they have to perform, which they then do, right? Because they have skin in the game.
On that note, Rune, is there anything particularly exciting from the Obex incubator that that you can share with us today, or just any general kind of progress update, progress report?
So, I mean, I can't share specifics, but I'm what I'm really excited about, because kind of the next step for Sky, right, is to own more of the rails end to end, or sort of integrate more of the rails end to end. So, if you look at like the most exciting collateral type we've done so far, which is JAAA, in my opinion, that's an example of like bringing on board like a structured product with CLOs and so on. It's like pretty advanced, but it's actually still very much like a TradFi product, where a lot of the complex stuff that's happening with these CLOs, that's happening in TradFi world. And the next phase for Sky is to actually bring the structuring, bring the financial engineering, bring like the risk tranching on chain. So it's happening within Sky like Sky ecosystems and basically done on the infrastructure of Sky. And this gives us three major advantages, right? So the first one is just efficiency, because there's just less intermediaries, so the fees can be lower, and then it can be higher scale. And then it is security with like better risk, like sort of access to data, and like the risk management is much more scalable, and just that actually also opens up for more efficiencies. You can actually in many cases give more leverage because you just have a better understanding of the full risk profile. And then finally, it gives this like much greater control in terms of technical risk and legal risk. So all this sort of like sort of black swan type of stuff where you really don't want to get hacked and you really don't want the funds to get frozen or something, that is like all coming under the umbrella of Sky with this new generation of build out to the Sky agent network. And again, it just means like you can have more and more of these agents all operating in parallel, all executing on their own strategies, ultimately looking out for their own benefit, right? Like just chasing profits for themselves, but doing so in a way that's going to grow Sky ecosystem as a whole, and yet not create some kind of outsized risk or somehow like blow up the whole system, right? At worst, they can, make, basically not make profits and not do well as a business. But if there's 5 of them, 10 of them, 20 of them, then some of them are going to do really well. And the ones that do well are the ones that's going to grow and the one that's going to take it forward. So you have this evolution really in the ecosystem that just drives growth and innovation constantly.
Yeah.
Go ahead.
Yeah, no, Rob, I was going to say, we've been kind of on point 2 there. We've been really hammering on that thesis about how our thought is that, okay, right now we've got, CLOs backing USDS, obviously money market funds, short dated treasuries back the large stable coins in the ecosystem. But the next phase is going to be the actual interesting and, for lack of a better term, capital efficient, take that back from DeFi summer, ways to take these products, bring them on chain, and then do very simple things like even just borrowing against a money market fund on chain, or looping different types of private credit funds. These types of things, we're seeing this as like the very clear next step to where then the kind of institutional capital flow, that's when like the light bulb goes, oh, this is why blockchain is actually really interesting. This is why composability in DeFi is really interesting. And we're already seeing it with vaults on Morpho. We're seeing it with different types of products that have much stronger yields using the traditional or the legacy finance products on chain. And so, Rob, I was just going to say, like, your point on credit creation and basically additional leverage being the main product market fit for the immediate term. It sounds like, Rune, you're kind of confirming that to be the interesting next phase for Sky.
Yeah, absolutely. I mean, I think when I look back at like the history of DeFi and Maker and now Sky, it's basically over time we just learned more and more that essentially we're really trying to rebuild TradFi. Like it's like the same type of stuff of what's already happening in the financial system today. The difference is it can be done way more efficiently, and in some cases it unlocks these complete phase changes and like paradigm shifts where you actually can do like completely new things. But usually what's just happening is you're like doing the traditional stuff, but like faster and cheaper. And then that opens up for like new levels of scale or new levels of sort of network effects and economies of scale out of it. But yeah, like it's exactly happening. And and to your point, it's like increasingly when I'm out like pitching the institutions and also when they come to us, it's increasingly they're sort of realizing, okay, actually we're already doing this, but we have all these problems. And then what you're saying is by, automating it with a smart contract or, connecting directly to a shared data infrastructure, then we can like solve all these costs and all these problems we have right now. And then through that, ultimately, like, I mean, there's two ways, right? There's two sides they look at it, right? One is like they can increase their profits. But actually what I think is the more common stuff that's happening now is what we call institutional FOMO, right? Where they're starting to be worried that the others will do it and that will like sort of lower the margins or like, it'll like sort of like they might like erode at their fundamentals. And so they feel like they have to be in there now. Like they don't want to one day get caught off guard and realize that they're just getting outcompeted by somebody who were faster at adopting the technology.
Yeah, man. And we had Santi on yesterday talking about how his thesis is around crypto and enabled companies actually being able to take crypto rails, bring them into their company, and those being the investment opportunities that he wants to be a part of. But coming back to the token side of things, Rune, and kind of to part of this institutional flow, the future of token markets are really starting to look a lot more like public equities. This was also part of our conversation, Rob, with Santi. Quarterly earnings calls, quarterly reports, investor relations and capital markets teams, one-to-one engagement with the largest holders, centralized top-down product decision-making, kind of the Fugazi decentralization around DAOs eroding, ultimate transparency. A lot of these things, Rune, Sky has been very, very ahead of the rest of the market with, especially when it comes to transparency, the programmability. We saw $2 million of buybacks each week since late January. Talk to us about your perspective of the Sky, the asset, as it pertains to kind of looking more like looking more and more of something that investors can understand what they're investing in. Obviously, not financial advice here, but talk to us about your perspective of the industry at large and Sky as it pertains to really the restructuring of crypto assets.
Yeah, I mean, so what I think is interesting is that it's just so important that finally there seems to have been some kind of, like a phase change in the industry where hype and pump and this like brain dead casino behavior is finally no longer the driving force, and perhaps this time actually will not come back for good. Because I remember saying this exact same thing, when Luna crashed and FTX crashed, right? But it did come back. But I think this time it's quite a bit different. It's like a lot more brutal how the space is sort of crashing into reality. And I mean, the reality is just like, if you want to run an economic system or a business, it has to be sustainable, right? It has to make money. It has to generate value in some way. However, what's interesting to sort of this broader point is that, the crypto projects that really, really generate value in a sustainable and scalable way, they are the ones that, I mean, the thing that sets them apart is that they tap into the core benefits of decentralization, right? Because that's actually the only real thing that crypto has to offer, right? Like if you're not doing that, then you don't really have much value from crypto ultimately. And you look at something like, tokenizing assets and DeFi and like financial engineering on chain, right? Like ultimately it's about enabling decentralization, which then enables things like, like free market dynamics, which brings you efficiency, right? And transparency, which gives you risk management, which lets you get leverage and which gets you more liquidity. And like, I mean, Sky basically is a system that's sort of, it's all about just like figuring out, okay, what aspects of decentralization are the ones that unlock value in this way, right? And then let's kind of put them all together, make them as efficient as possible and make it as easy as possible to use them in the right way. Because like, I mean, there's a lot of projects out there that sort of get some of this stuff right, but then some of it they get wrong. And you have centralized components, or you have like over-eager, like too much but with Bitcoin, as I call it, right? Like where there's sort of like unnecessary levels of blockchain or sort of over-engineering of it. And then that causes some people to then conclude, okay, this decentralization stuff, it doesn't work, or like it's not really more efficient. Look, it's causing problems. Look, the governance is stupid, this kind of stuff, right? And sort of writing the whole thing off. But what's happening is you're messing up one of the components, and you hear all of the components end to end need to line up, right? The stars need to align, so to speak. And then you start to really unlock an economic engine that is just at a completely different level, like unlike anything that's been seen before, right? Because with decentralization, with resilience, you get this sort of ultimate ability to scale without running into like scaling issues if you really do it right. And I mean, finance is just fun. I mean, it's fundamentally sort of like the ultimate scaling of everything, right? Then you end up with sort of the most abstract, which allows you to handle the most stuff all at once, which allows you to sort of bundle all the scale together and then unlock economies of scale, right? And this is where the sort of fundamental efficiency comes from. That it's like the basics of like economics, really, right? That's being applied in practice, and that's what we're doing with Sky. And we're turning that into products like stablecoins and Sky agents and all of this stuff that's coming out that's going to drive the growth of the ecosystem.
Yeah, without any of the fluff. And so, one of the things that came out, I think just yesterday, was this announcement around BlackRock and their Biddle fund becoming tradable and composable with the rest of DeFi, which could unlock the credit and leverage as it becomes more deeply integrated with some of these DeFi mechanisms. I'm curious from your perspective, how much of the fundamental decentralization and blockchain value comes as a result of tokenizing the thing, putting it on chain, versus how much value is unlocked once you can borrow against it and it becomes composable with the rest of these mechanisms? Like, you got efficiency gains and then you've got network effects, right?
To my earlier point, the whole point is you need it all, really. And there's a bit of a chicken and egg problem, right? Where even when you have it all, then you need to have it at scale. What's also, I guess, what we're seeing a lot, what's kind of to a benefit in DeFi now, is there is this amount of essentially like captive liquidity that exists inside of crypto and inside of DeFi, that actually means that despite the fact that most of the products in crypto right now, they're like less efficient. I mean, the Sky savings rate is like one of the few examples of like a large scale, low risk, high liquidity product in crypto that actually pays more than SOFR, right? For the most part, you see like total underperformance of crypto, just like terrible rates, and even then there's like lots of risk and lots of weird technical quirks and so on, right? And but actually that doesn't mean we're not totally dead, because we just have a bunch of captive liquidity that's still playing in this space and that basically prefers crypto or essentially native to crypto, right? For good reasons, right? Because obviously stablecoins are that's the most convenient way to hold capital if you know what you're doing, for sure. But what we really need is we need blockchain to actually showcase its real advantages and come out with products that are both lower risk and higher returns and better transparency, and then just systematically, DeFi pill TradFi, right? And get them to really get into the space and not just do one of these things, but all of these things. And most importantly, make profits from doing it.
Yeah.
And again, like I said earlier, this is happening. And in fact, they're afraid of their competitors doing it, right? So they are sort of getting involved. Yet we're not really seeing the economies of scale just yet, right? But because of this FOMO that's happening, it is a self-fulfilling prophecy. Like, we're absolutely going to get to that point where it scales like that. And the sort of the flippening will happen, right? Where the whole system comes on chain.
Yeah. As we close out here, I'm curious to hear more about this institutional FOMO that you're talking about. Are your sales cycles getting much, much faster? And how quickly is an institution able to bring a CLO or a money market on chain? What are the steps that ultimately they need to do after they, sit down with you in New York?
I mean, so Sky's in a very unique position because we are like the slowest link, you could say, in the chain, because we have the money, right? So it's pretty easy nowadays it's really easy for an institution to tokenize something and get it done if they know they're going to get 200 million when they do it, right? Or $1 billion or something, right? The harder part is like then figuring out, well, what do they need to come with, and what can they bring that will let like an allocator like Sky basically support them in the Sky risk framework, so that you can have a Sky agent like Grove or Spark deploy into it in a way that's safe and that's scalable, and then where the economics end to end makes sense, right? And so what we're actually seeing now is, and as I was talking about earlier, right, this is sort of the next phase for Sky, is that they're willing to fully adopt our models, right? And like basically understand, okay, instead of Sky having to sort of, like in every single time sort of use some kind of bespoke approach to figure out how do we make the connection between some particular asset, which is what we did with like Biddle and JAAA and all these OG tokenized assets that have been brought on chain up to this point, right? Essentially, most of them were brought on chain by Sky, doing like this sort of bespoke due diligence, and then finally figuring out how can we seed the liquidity. And then that's what brought the institution to kind of tokenize it, bring it on chain in the first place, and then it could grow from there, right? But it was still a pretty relatively limited amount of tokens that have happened like that and that have actually achieved scale. And the next phase is then that Sky sort of, we're basically gonna start using these standardizations. So once you do it one time, then it's really easy for 10, 20 institutions to all do the same type of thing. And then all of them get allocations from Sky, right? And that's when you'll see the sales cycle shorten extremely. And then the really cool part is then from there, it can easily grow to the rest of DeFi as well. And just it's all going to feed on top into each other basically, and just like grow the network effects, liquidity, and the efficiency.
Thank you for your time, man.
Rune, really appreciate it. Yeah, this is great.
Glad to be here. Thanks.
Keep up the good work. See you next time, Rune. Thanks.
Congrats on the recent success. Hope you guys hit that 600 million mark. That'll be a big year.
Yes. Thanks a lot.
All right, man. See ya. Alrighty, guys. We've got our next guest, Giang Gui, from Head of Issuer Growth at Securitize. We're going to take a quick break. We'll be right back and we'll get Giang up and ready. Guys, Giang and Stani, happy Friday.
Don't go anywhere, guys. Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game. Go anywhere on-chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Havachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Looking for yield that stands out? Infinify gives you just that. Deposit stablecoins and earn far more than the current savings rate. Infinify is a battle-tested, reliable DeFi platform that is ready to go. Head to infinify.xyz. Open, stable, borderless. Frax is building the next generation of stablecoin infrastructure for the digital finance era. Visit frax.com to learn more today.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game. Go anywhere on-chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Talk to AI like your lawyer. Alrighty, guys, we're back. We got Giang Gui, the head of issuer growth at Securitize, a new hire with a pretty epic background in finance. Giang, how are you?
I'm good. Thank you so much for having me today.
Absolutely. Thanks for coming on. So you were previously the VP and head of US equity and ETFs at NASDAQ. Could you just give us a background and a story as far as how you go from head of US equity at NASDAQ to Securitize? What was it that you saw that ultimately brought you there?
Yeah, I mean, I've spent the past decade at exchanges, so most recently leading US equities and ETF for NASDAQ. So I'm really grateful for that background in traditional finance and exchanges because it gave me the opportunity to work really closely with issuers, regulators, liquidity provider, and a lot of market participants on some really cool investable product. Notably spot Bitcoin ETF today, those launch was definitely a highlight of my career. So I had a front row seat into how you bring innovative products and modernize market but doing so in a careful and collaborative and with a very strong investor protection and regulatory framework in mind. So, tokenization has been something very interesting to me just through my exposure with digital asset products. And I do believe in it being the next evolution that will transform the financial markets. tokenization at its core is upgrading the ledgers and making everything more transparent, secure, programmable. So there's been a lot of growth within the space and over the past few years, and there's a lot of tailwinds ahead from a regulatory and adoption standpoint. So I knew I wanted to be at a firm that is enabling this growth in a responsible way. So why not join the biggest firm, that has a regulated end-to-end stack to support issuers and already has earned the trust with the world's largest asset managers, that is Securitize.
And
Beautiful.
and
Congrats.
yeah,
Thank you.
congrats on the role. Before we get into everything that's happening, with issuers and Securitize, I'm just curious, is it the consensus opinion when you left NASDAQ, the adoption of tokenization, was that something that your peers shared?
I mean, definitely, it's something that when I was at NASDAQ, we were talking about on a daily basis about how do we,
Okay.
enable this. NASDAQ did put out a filing to enable trading of tokenized, securities on their exchange. The New York Stock Exchange also put out announcement about them operating a tokenized ATS. So you're seeing a lot of these traditional players forming digital assets team, creating a digital asset strategy for themselves.
Awesome. We've had a lot of conversation, especially more recently, around this concept of neo finance, all of these financial mechanisms around tokenization and RWAs and stablecoins, and these are hitting a primarily target audience of issuers, asset managers, institutions, allocators. Could you just help us identify, given that you're the head of issuer growth at Securitize, what does it mean to be an issuer?
An issuer is, you're issuing a security. So for a company, it's your company stock. For an asset managers is investable products that investor can invest into the product. So at Securitize, we talk about native tokens, issuer-led tokens. So that means we're working directly with the issuer to mint these tokens. And so the tokens from Securitize and who in partnership with these issuers are one and the same as the investable product that they're putting out. It's not a derivative or a swap base to the underlying where you only get the price appreciation. You actually truly own the underlying security, and you have the same dividend rights, voting rights, and you're on the issuer's cap table as well as a shareholder. So you're truly it's one and the same
Got it.
through the securitized model.
Yeah, and I've got one more follow-up, and I'm sure Andy's got questions as well. I'm curious, we've had a lot of these conversations about tokenization ranging all across the spectrum from SPV wrappers to hybrid models that are one-to-one backed, all the way through to Securitize's native tokenization, native issuance. How did you become convinced that the native issuance model was the right model for issuers?
Being at an exchange, we've always worked with issuers, right? It's always, at our core, we're thinking about, what is the best for issuers because they're the foundation of the financial capital markets. What works well that can be traded well. What is it about Like we really care about investor protection. So by going it in the issuer-led native tokenization, it's the only approach, in my opinion, that allows for all of that. You in partnership with the issuer, you're able to provide those same rights as the traditional share. And it really is setting the standard for what a token really means. And there's like you said, there's a lot of options out there for tokenization, but if you're not digging under the hood, you don't actually know what you might be owning. You might be owning a swap, a derivative. You don't know what access you really have when corporate actions are applied. Like, are some of these other wrap type of structure for tokenization really reflecting those corporate actions properly? So the way Security does it, we believe it's the right way, and because it's in partnership with issuers, like you truly know what that token represents.
Yeah. Yeah, definitely. So then with that kind of unique competitive advantage in mind, as the head of issuer growth, what are your top priorities in the first few months here, particularly in expanding Securitize's issuer base beyond the current $4 billion or over $4 billion in tokenized assets now?
Yeah, so in my role, I'll be working with asset manager, public-private issuers to tokenize their assets. I know you guys are familiar with our motto, tokenizing the world, and we truly believe that all assets will move on chain to take advantage of this superior technology. So my role is to show issuers, what better infrastructure, better ledger technology really can unlock for them and their investors. So I'll be spending my time deepening relationships with asset managers. And, we already have a really great list of partners like BlackRock, Van Eyck, Hamilton Lane, KKR, Apollo. But we want to continue to expand those partnerships with the marquee asset managers out there, and as well as companies. So we'll be sharing insights about the tokenization landscape. What are the benefits of tokenizing? What efficiencies and access? And what are some of the use cases of the tokens that we're seeing today? Um, so on that's on the the issuer side, but we want to make sure that the token is has a robust ecosystem that is supporting it. So we're engaging with traditional liquidity providers as well, and banks and service providers to ensure the transition is as seamless as possible. And so our goal is to partner with these firms to launch new funds across asset classes. Today, the treasury market is definitely a big one. We recently launched a high yield AAA CLO token that is in the market, but we want to bring additional asset classes so that there's solutions for all of the investors' needs on chain, as well as tokenization of public stocks and ETF.
Where are issuers right now on their educational journey learning about tokenization?
Yeah.
Like you mentioned inside NASDAQ, you were talking about tokenization every day, you made this filing. Native issuance is sort of at the tip of the spear when it comes to tokenization. Do you have issuers that are just a little bit too early? They're not ready to restructure cap tables and do these kinds of things. And yeah, where do they fall on how early or ready are they for these products?
Yeah, it definitely varies depending on the firm, right? BlackRock launched BIDL with us in 2024, which I know Rune just said it's the OG asset, which is really a great testament to the reputation they've built being a 2-year-old fund and token. So that's really exciting. So you have that product, and then you have a number of other products out there. So they're definitely but we're still in early days, right? The RWA market is 25 billion. So it's still very early. There's a lot of projections from anywhere from 2 trillion to 30 trillion in the next 5 to 10 years. So there's a lot of opportunities there. So our conversations with issuers are at various stages. But we're talking to pretty much all the largest asset managers because they're interested in learning. There's definitely firms that have started thinking about what products in my lineup works well to be tokenized. There's firms that have filed to offer tokenized ETFs out there. So there's definitely varying degree of readiness, but I think one at the core is just everyone's asking about it, talking about it, and it's been an exciting 3 weeks for me at Securitize because we get to be at the center of those conversations and hearing how firms are approaching it.
Yeah.
Yeah, I'm curious if the actual vision for where you want to take this, your role, but just generally working with the issuers, if you guys have an aligned, shared vision. I know it's only been a couple weeks. Perhaps you had your perspective coming in to, from your experience with Nasdaq. Then, Securitize has their way of doing things, and then there's an entire market that has their whole way of doing things. What has been some of like the through line so far that you've experienced, or just maybe you could give us a bit of more insight onto, the perspectives or the ways that the issuers are thinking about things versus how Securitize is versus how some of your experience and perspective gained at NASDAQ. Just trying to get a bit better of an understanding as to like where there may be some potential, divergences in agreement, disagreements, or generally like where there is consensus in the issuer space.
We take a very collaborative approach with the issuer. We try to understand what is their time to market, what's their goal of tokenization, and how can we solve those needs for them. So in the conversations, we want to understand, are they looking to distribute, like expand their distribution? Is it about efficiency? So we're trying to learn all of that, and then we work with them in terms of what's the right structure to launch these products. What would be most attractive to the on-chain ecosystem about the product, so that when we're structuring it, we make sure that we're incorporating those aspects within the tokens themselves to make sure there's utility on chain. I mean, coming from the ETF world, I think things I've learned about ETFs, now it's kind of ubiquitous that people are very familiar with ETF. But in the beginning days, there was a lot of questions about like how exactly does this work? Is this product going to be able to withstand market volatility and all the different market cycles? And and then once it did, it really accelerated adoption. So I think tokenization is in a similar path, right? Like we're early days, we have a few products that have done really well, and it's going through those market cycles and really showcasing that it is a resilient structure. We're partnering with issuers who have really strong brand. They're providing institutional grade investments, and their products are serving a purpose. So when you wrapped all of that together and you bring in the ecosystem, like that's how you make the product successful and you scale it into the future.
Yeah. I think Securitize took the world by storm with this Uniswap Biddle collaboration. People saw it and they say, yes, finally, we're integrating these things more deeply into blockchain finance, DeFi, neo finance. And this is a trend that I anticipate will continue in orders of magnitude as more of these products come online. I'm curious if you could help us understand how this does relate to BlackRock's vision for tokenization and how you see this progressing with their goals. Is it to expand distribution? Is it to increase efficiency? Is there something else? And generally, as people, launch these products, what does it seem like is the most prominent goal with tokenization?
So, I mean, we were really excited about the announcement in the integration with Uniswap X. The integration is to create liquidity for the token. So it operates a request for quote, so that when an investor wants to buy or sell the asset, we're able to facilitate that liquidity. So that the transaction can be executed on chain and have that transparency and efficiency. So, liquidity is always something that is very important. A lot of the use case for tokenization today has been very much primary market driven. So, the most powerful outcome of this integration is about the two-sided liquidity in the secondary market for these tokenized assets. So, and I think the key is also it's still being regulated. Like everything we're doing has compliance and regulation at the core. We're ensuring that everyone who is owning the token is holding it in KYC whitelisted wallets. So that continues to be very important to us. And so, I think you asked about like what are people looking for with the tokens. One, it's about the efficiencies that blockchain technology can provide with the updated ledger. Distribution and accessing new investor base is definitely very important for the issuers. And that comes with how integrated is your tokenization partner into the DeFi ecosystem, and Securitize has some of the largest, has very plugged into that ecosystem. We're plugged into 20 different blockchains. We're integrated with the custodians, the market makers, the oracles, so and the DeFi protocols. So we really are able to facilitate that end-to-end solution for issuers when they're looking to enter the space.
Yeah.
Yeah.
And you guys have like the SEC registered transfer agent. I'd imagine that some of those licenses, like this one, as well as you're operating the regulated ATS. How do these licenses work that allow you to facilitate the two-sided liquidity of these products?
I mean, we are the only tokenization platform that has the regulated end-to-end full stack to support issuers when they want to tokenize. So, you mentioned our SEC registered transfer agent or SEC registered ATS and broker dealer, and then we also have a fund administration service. Because to us, we're not looking to enable this by waiting for exemptions from the SEC or trying to push the boundary of regulation. We want to do it in the way that it fits with the existing framework. And I think that really aligns well with the asset managers and the issuers who are highly regulated. That gave them the certainty that we're able to support them in a compliant way. Throughout the whole stack, we mint the tokens and support the cap table and shareholder management through our transfer agent. We service the fund through our fund admin business. We support placement of the tokens through our broker dealer and also can facilitate trading through that. And then we have the ATS to support the secondary market. But we're really excited to see how the ecosystem continue to grow and how these additional integration will help even further make the liquidity more robust.
What are some missing pieces? Because when you mention the full stack, it feels like everything has been put together. You've got all the licenses, you've got all the regulations, in order to facilitate the movement and tokenization of these things on chain, and then also connect them with distribution partners or like you said, end to end full stack liquidity. What is the work still to go? Where are some of the missing gaps that you're hearing from these issuers?
Yeah, I mean, for me and like why I'm focused on it is really bringing more of the assets on chain. We want to be able to have different types of products that are available on chain to service different needs for investors. A retail investor need is very different than an institution. So, we want to be able to have products that appeal to retail. And also, yeah, and they can use it for the different use cases that they have. And then we also want to make sure that we have products for institutions. So, having those conversations with issuers to think about what are different investment vehicles they have and how do we bring that into the tokenized economy is, what, I'll be focused on and where the gaps I see for my role. And then, I think as the product come on chain, people develop new utility for those assets. So it'll be exciting to see that as it grows.
Zhang, last thing for you. When it comes to the kind of experience that you've had with ETFs, Bitcoin ETFs, et cetera, we're seeing different developments on the market structure side of things, on the regulation side of things. I'm curious how you anticipate, should this market structure bill, if we're speculating here, go through before the end of the year, before the next midterms or sooner, how do you anticipate these positive regulatory shifts impacting tokenization growth? What should issuers be thinking about? How do you kind of think about this?
Yeah, I mean, regulatory clarity is really welcomed, and that's been one of the tailwinds that has accelerated acceleration over the past year. And as um, you know, the Clarity Act will hopefully get adopted and the additional rulemaking that is happening, that just provides more clarity for the market. And what institutions need is that clarity so that they can have confidence in investing further into their digital asset platform. And so we think that's all positive. And the SEC's already started to put out guidance in terms of taxonomy for different types of tokenization. I think that's all been very helpful and positive steps.
Awesome.
And thanks for your time. Congrats on the new role.
Thank you so much for having me.
Yeah,
We'll see you next time.
It's a different journey over here in the on-chain landscape. So I hope you're getting familiar with everything. We need to see your Twitter account. I'm sure you've got LinkedIn, but we need to see your Twitter come soon.
Yeah, we'll work on that. No, it's been very exciting so far. So I'm excited to be working with you guys more. So thank you so much.
Awesome. Congrats again.
Thanks, Zhang.
We'll see you next time. Thanks, Zhang.
Tokenization, man. It keeps happening.
I gotta say, I enjoy learning about this. This
Yeah.
feels like we're like digging into the plumbing of finance, which
Yeah.
from my perspective, it was all paperwork and it was all like almost like politics. So it wasn't that interesting. But when we think about it, like there's the regulations are the code. You know what I mean? Like
Yes.
we're going to have to take all of this paperwork and all of these like rules and regulations and codify them and program them so that they do become enforceable on chain. And that work is just as interesting as all of the on-chain work that happens today.
Yeah. Yeah, man. I mean, it's this convergence just keeps becoming more and more apparent. And it's just very, very, it's exciting. It's cool. Some crypto natives don't like it. Others think it's great. As we spoke about with Dave earlier, it's the logical next step. Guys, we got our final guest. We've got Stani Kulechov, the founder of Aave Labs. Aave's big Aave will win proposal from Aave Labs this past week. That was yesterday, actually. Big proposal. We talked about it earlier on the show. We had some tweets come out about it earlier this week. This is the first time Stani's talking about it publicly. We have a good set of questions. We have some things that the community wants to hear about, wants to know about. As far as short-term, market has a green day today. Aave has been reacting well to it. I've seen a ton of different people responding positively. Others, have their grips about it. We're gonna get to the bottom of it. We're gonna get Stani up and excited to just generally dig into the reasonings and understand a bit more about the why and the how about the Aave will win framework. So without further ado, guys, we will get Stani up and we will close off this awesome week on Rollup TV. Stani, welcome back to the show, man. Good to see you. Big week.
Good to see you, everyone, and happy Friday.
Happy Friday, man. Congrats on the proposal. Aave will win.
Thank you. Thank you. It's I think it's interesting times in DeFi at the moment, and also for Aave and also Aave Labs as a team, but also where the whole ecosystem is going, and the potential of Aave and DeFi for the future. I think we're gonna probably talk about it a little bit more.
Yes.
Yeah, I think just some context setting, right, Stani? We've kind of been going through this kind of sophistication and maturation phase of the industry broadly, right? And I think there's certain token designs that were prohibited due to regulatory, regimes previously. I talked about imagine seeing Andre Cronje's valueless governance token medium article be written today as a new token structure, right? And we talked about returning to fundamentals. We talked about this idea of the revenue meta, which is kind of a meme, but it also works in terms of like, oh, this is where the space is going towards cash flowing tokens, towards this new idea of actually unifying token and equity. Why don't you just break down the Aave Labs proposal, Aave will win, to the DAO, and why this matters for Aave's next phase of growth?
Yeah, no, I agree kind of on the landscape of the tokens is a very interesting inflection point. And the Aave will win proposal is that has been for us a way sort of to try to think about like how does the token value capture work? And there's obviously, like when you go all the way back to the early days, the project itself was funded by an ICO back in 2017 when we were ETHLand at that time, and very experimental project, one of the first, would say, DeFi protocols, first lending protocol at that point, and more of like a peer-to-peer model. And at that point, the idea of token economics, token value capture, and whole DeFi space was completely different. And obviously, over the years, things have been evolved quite concretely. But when we think about at that point when things started off for ETHLand, our sort of a main idea was that how do we actually are able to build this sort of infrastructure that could be connected to any sort of a use case in lending, and down the line could become a backbone for financial systems, and the same way as, for example, the internet protocols like IP and HTTP are servicing everyone and be as little as opinionated as possible. So effectively, everything started with experimentation, and Aave Labs back then, as the ETHLand team, we were the contributors of this systems. And over the years, obviously 2020 came, we launched the first version of the Aave protocol, which was fundamentally very different than what we did in the past. And then followed DeFi, and that 2020 year was fundamentally important for us, not just because the protocol itself started to get traction, protocol market fit, but because that was when a lot of these initial sort of governance functionalities started to be built into the system. So at that point, AIP1 was something that we released, and AIP1 also defined effectively what the token governance is for the Aave protocol. What does it do? What's the purpose? And also, what is the value capture of the protocol? And it stated effectively that any sort of protocol revenue that revenue that is created, the protocol takes a portion of that revenue into the DAO treasury, and then the DAO treasury can be used to fund different sort of initiatives, whether that's further development of the protocol, further research as well, or paying for service providers such as, for example, risk management and other services that effectively add value into the protocol. So it kind of like that opened the doors for the community to come and contribute. And that year also is when the DeFi summer was peaking. So you had this interesting yields on chain at the same time when it was COVID, interest rates were low everywhere in the traditional world. And then you had these governance tokens on top of it, that protocols were giving for users ability to own these pieces of infrastructure. So coming out of there, and over time, obviously, Labs has been a fundamentally important participant and kind of permanent contributor in the Aave ecosystem, building some of the infrastructure from like the Go stablecoin, Aave V4, and so forth. But one sort of big thing for us as a big kind of a pushback has been always the regulatory uncertainty. And over the past few years, I think it's been extremely hard to be a DeFi builder, whether it's someone who is in the US or in Europe or anywhere, any part of the world. And we were experiencing years of risk that came out of that uncertainty and aggressive policies by the SEC to pretty much almost every single DeFi protocol that was out there. And that sort of pushed a lot of the innovation back and a lot of the adoption back. And I feel like that also affected the whole growth of DeFi. So if you look at the existing growth phase where DeFi is today, let's say it's in total 120 billion. Last year peaked at 220 or so billion, and going a few years back, it was 200 billion. A lot of that sort of limitations came from the fact that it was extremely risky for a lot of DeFi teams to actually contribute and push the innovation and push the growth further. And the Aave will win proposal effectively establishes a really, really important part of the whole story is that the labs, the labs as a contributor builds products and wants to be self-sustainable and wants to create a product layer that then acquires users and then increases the economical activity of the Aave protocol. And one of the things that has been really challenging is to understand that, well, where does the value capture go? Does it go into the Aave token or the Aave labs in form of equity? And the second question is that, so when you get funding, let's say into the labs to basically grow these products and compete with the biggest fintechs in the world and grow the protocol at the same time, where kind of like the focus is going to go and how to ensure that everyone who is contributing, growing the protocol are thinking and focusing on the Aave token and being token centric. And going back and forth, and there's a lot of discussions in the past months about this topic and DeFi in general. DeFi protocols and DeFi teams had to rethink about how to think about token value capture and token economics and how to go away of this model of like these are just governance tokens, valueless tokens, but actually these are fundamentally important businesses that are being built now and could be empowering the whole financial infrastructure over a long-term period. And how do we basically ensure that that is very clear? And that's where the Aave will win proposal comes into place, where we from Aave Labs, we want to show a extremely strong commitment, but also alignment with the Aave token holders and ensure that the work that we are doing is seen going as a value capture at 100% rate on anything that's basically we're building on the product layer directly into the DAO. So it takes the AIP1, which basically gives a mandate that the protocol generates revenue, and that revenue goes into the Aave DAO treasury, into also that products that are being built, let's say outside of the protocol by Aave Labs, 100% of that revenue is going to the Aave DAO treasury. And that is fundamentally a big thing because it unlocks a completely new streams, not just a one stream, but streams of revenue outside of the lending business model into new sorts of business models and also on the product layer. And that is a big benefit for what this proposal actually does for the Aave as a ecosystem.
So I think that traces through the entire history leading from AIP1 all the way through to Aave will win, which is transcended several eras of DeFi. And we were also early contributors of DeFi. You may not remember, Aave Grants was actually the first dollar that the Rollup made way back in 2021, I think, for doing DeFi education. And so, we've kind of grown as Aave's grown and as the space has grown. And I think there was a tremendous effort to decentralize early on. Could have been due to regulatory. There was also a strong belief that decentralized governance was the right path to organize a community working on an underlying protocol layer. And we were fighting forces of centralization and intermediaries. There was a lot of things that happened in the middle, which you explained in AIP1. And now we find ourselves at a point in time where we're seeing the decentralization that spread a lot of people and things out and diffused all of this operationally. We're seeing a lot of it consolidate and come back. And here at the Rollup, we've been talking about this unification. And that's really what the proposal feels like. It feels like a unification of labs and DAO. And through the proposal, there's several points that I think we want to get into. One of them is that, Aave Labs is making an ask. I believe the ask is, I want to make sure that we get this right, but it is for a certain amount of USDC and a certain amount of Aave. And so, if the DAO is to, commit to this ask and provide this USDC and this Aave to Aave Labs in exchange for 100% of the revenue generated via the protocol and some of the other products from Aave, it almost feels like, the DAO is kind of buying out the labs. And so could you unpack is this the right way to think about this? It's this exchange of money now for money later. And, if we get into the numbers here, I believe the revenue that we saw in the thread that Aave posted was upwards of $100 million throughout all of, I believe it's per year throughout all of these Aave products. The cash and Aave that the labs entity is asking for, 75,000 Aave at these prices, roughly $8 to $10 million. It's a significant portion of the DAO's Aave holdings. And then there's USDC, of which the Aave DAO holds $161 million. And it's asking for the Aave Labs is asking for $42.5 million of stable coins, 25 million in primary, 17.5 million in milestone grants. And so this is a substantial ask, but it seems as if the Aave DAO would recoup this investment in a short amount of time, perhaps even 1 year or less. Is that the right way to think about this proposal? And can you just verify this math that this investment that the DAO makes in labs would get recouped in a year or two?
Yeah, there's of course there's different stable coins. Not everything is in the USDC, so there's different proportions of that and assets, and typically stable coins in the treasury are also earning as well. And something to think about is that when it comes to the Aave treasury. Effectively, it's not a static treasury like in many of these DAOs. So throughout the years, over the past 8 years, we've been able to effectively build a protocol and an infrastructure, both Aave and Aave native Go stablecoin, into a place where it's revenue generating. Very few DAOs and very few protocols are in the same state as for example Aave is, but fundamentally that means there's ongoing revenue. There's one important part of that is that the protocol has usage and it has users, and that is something that the Aave Labs' developed product layer is supporting and driving that traffic and experience and so forth. And the way we think about it is that our original approach was that maybe actually the products of the Aave Labs can actually be self-sustained and developed outside of the protocol. And that's a way to effectively grow the products, fundraise, and really compete on user acquisition at the same level as, for example, a lot of these fintechs are doing. But at the same time, you get this sort of same problem of value capture, which is fundamentally in a place where you have to think about is the value going, for example, into the equity or into the token. And the way to solve this is kind of like an interesting and a little bit similar model as Uniswap unification proposal. So there's some ingredients there, but a bit different model is applied here. So in Uniswap unification proposal, they are foregoing all the application fees to basically drive traffic into the protocol and also monetize on the protocol level. In the Aave will win proposal, the trade effectively here is that the protocol itself is earning and the protocol is creating revenue, and with good treasury management, that revenue is managed well and treasury is managed well. But at the same time, as Aave Labs is building these products, it generates additional revenue. And then the idea here is that additional revenue is now at 100% rate directed to the Aave DAO treasury. So that effectively means that as the products are growing, which is effectively Aave app, and Aave app is our new offering that is fully tailored to consumers, because we believe that the only way to get DeFi to mainstream is by building experiences that feel like fintech. So abstracting away wallets, gas fees, networks, and being able to link your bank account into Aave app and deposit in a few seconds is the experience that passes the sort of fintech test. Then obviously there is Aave Pro, which is about the sophisticated DeFi experience, but also close connectivity to banking, so you can pull funds in, additional security on the wallet management, and you can connect your own wallets. And the third product is the Aave Kit, which is more on the API SDK level, enabling integrations of the Aave protocol in a safe and secure enterprise-grade level for example, fintechs and traditional institutions. Then there's obviously the Horizon market, which is a RWA play that we think is going to grow substantially. So the way to think about it is that these products will effectively grow the revenue for Aave, because we grow the user bases, user activities, and that grows the economical activity for the protocol, going directly to the consumers, servicing sophisticated DeFi users, and then enterprise sales for fintechs. And by foregoing the revenue of these products that could be as big as any sort of fintech in the future, the trade here is effectively that the Aave DAO funds a budget annually for Aave Labs, not just build and maintain these products at an extremely high quality, but also to grow these products and invest into customer acquisition. So the way to think about here is that the DAO effectively is investing into protocol innovation, R&D, and product innovation and product growth, and that expands the revenue capture surface and also the velocity of revenue over the upcoming years. And fundamentally, what we're saying is that Aave Labs will keep building for profit products and expand the profit surface, but all the profit is going to go to one place, which is the Aave token. And by doing that, that creates that removes the uncertainty between value capture, and that makes things more simple for anyone who are thinking about the Aave token or thinking about how the relationship with the labs and the protocol, the DAO, and the token holders is structured. And I think that's a really good model, because what I'm very excited about is also to look into the traditional public markets and think about what kind of things we can bring from there to actually make tokens that are running incredibly potential businesses on chain, and how to improve those governance mechanisms for the token holders. And I think that is a really interesting topic as well.
Yeah, I mean, I think the industry wants tokens with clear value accrual mechanisms, undeniably. I also think that this proposal from the more institutional folks that I've just spoken to about it in the last 24 hours makes the token much more investable from an institutional standpoint, which I think is very important. And it just kind of shows, Stani, that the future of these token markets are going to start to look a lot more like public equities, right? Quarterly earnings calls, quarterly reports, investor relations, capital markets teams, one-to-one engagement with large holders, more top-down hierarchical decision-making on product as a competitive advantage. Just this different regime is enabling a different structure. So you've talked about kind of how this proposal will allow you to go and compete with some of the largest fintech applications with your full product suite. You also talked about the continued funding, development, and execution from the lab side. I'm curious how Aave v4 pertains to this, right? Why this is such a central part of the proposal, and what v4 unlocks from the Aave perspective as it pertains to, the token being the central part, a token-centric future. Why v4 creates a interesting dynamic for the token.
No, you're absolutely right. Also, in the sense that the best execution environment for ideas and businesses is typically startups and scale-ups, where you have very little friction, you can move really fast, and that type of an environment is where the products should be. So decentralized governance works really well when you want to add resiliency, additional accountability, and transparency, and that's where basically in Aave protocol's case, you have this system where every sort of a parameter that goes into the protocol asset listing has a pre-vetted process, and that ensures that end-to-end the protocol is safe and secure. And that's why Aave as a protocol is a leader, because the risk is managed really well and there's checks and balances. When it comes to the product layer, you can't really use decentralized governance, voting, and for example, what kind of features should be voted into an application, or what kind of things should be on a landing page and whatnot. You have to operate in a sort of autonomy, product autonomy, and people who build the best products in the world, and now and in the past, and if you think about like Steve Jobs and a lot of these icons, they have a lot of product autonomy. So there needs to be this sort of independent decision making of how and what needs to be built on the application layer, and iterate quickly, and take risks. So one of the things that I'm really a big fan of is that we never know what sort of initiative or a product or a feature actually is going to be a groundbreaking feature. So for example, when we were developing the Aave v3, we added one interesting feature, which is called E mode. So it's sort of efficiency modes where you could get a really high loan to value ratio between assets that are correlated, and that works really well for users that are looping these assets. And that created a lot of net deposits for the Aave protocol. But when we were brainstorming about this feature and implemented it, we didn't understand exactly the impact. And it turns out it was a really good impact. And some features have less impact, but the main point is that you never know beforehand, so you have to keep innovating and iterating. And Aave v4 follows the same sort of innovation pattern that we've done almost the past decade, where we build things, but we build in a way, in a structure where we can actually add new products and features and test them out. So V4 is kind of like a combination of the best of the both worlds. So we have what V3 exactly does really well at the moment, but also adding a sort of modular architecture with the hubs and spokes, where hubs are where the liquidity is concentrated, and spokes are borrowing configurations where the hubs are giving credit lines to those spokes. And spokes can be any sort of even custom implementation. So what it really enables is that you get the same sort of Aave experience as you get today, but you can bootstrap really quickly new collaterals and use cases with proper risk management by giving new credit lines from the hub. And I think Aave v4 is something that is going to be a game changer as a sort of a baseline. But what I'm even more interested in is that if you look at DeFi today, and we're sitting at 120 billion TVL mark as an example, and peaked at 200, and a few years ago it was at a 200 billion peak. What that really tells us is that DeFi has been able to prove itself really well through resiliency. On 10 of 10 of last year, we liquidated over 200 million worth of collateral in the time frame of minutes, and we liquidated over a week ago $500 million worth of collateral in a period of a week. So these crypto assets and lending against Bitcoin and Ethereum has proven sort of resiliency. So if you can use this type of infrastructure for the most sort of dynamic assets, that means that you kind of like have battle tested the infrastructure. And with Aave v4, we can actually keep expanding that use case. So whenever there's interesting native primitives that are coming into from any part of DeFi, we're able to iterate quickly, onboard them without taking excessive risk. And at the same time, we know that we need to bring all the value into on-chain. And then that comes from tokenization, which can be supported with Aave v4, but also in the future, the lending, for example, might not have any sort of a tokenization, but you need to have some sort of custom adapters to adapt to that use case. So that's where the modular model really plays a very significant role. So I'm very bullish on expanding Aave into lending against traditional assets, like what we're doing with Horizon, lending against RWAs. But also, I think that if you look at where things are going over the next sort of decades, we have AI, we basically have almost unlimited amount of intelligence at anyone's disposal. We're going to have extremely cheap energy from solar. We're going to have batteries. We're going to have robotics. We're going to have a lot of resources around everyone that really makes labor abundant, intelligence abundant, energy abundant, and really kind of like creates this sort of new world. And getting towards that transition, we need financing, right? So if you look at the next maybe 50 years, if we are able to use Aave as a protocol to finance sort of the future, maybe we will grow it, bring it faster by 10, 20, 30 years. And that is, for me personally, more interesting than tokenizing anything that can be already traded in a traditional exchange or mortgages and so forth, because that is basically the future we want to bet on. And for Aave's vision going for the next decades, we want to have a future-proof vision where a lot of the collateral is coming from basically these types of high-quality yield sources, and that can be distributed through the Aave app, the Aave Pro, the Aave Kit, all the way to the whole user bases. So there's a lot of connecting dots between the product layer, Aave v4, and there's going to be a lot of quick wins. But the long-term horizon here is that Aave should be used effectively to finance the whole kind of a global transition into this new world where we're starting to head towards.
I think this is an incredibly powerful vision, Stani, and I think you make a really important point. We've seen decentralized organizations become ossified, for better or worse, in the past, right? You look at Bitcoin, it's effectively ossified. You look at Ethereum, it operates on, timelines that are very, very long. Lending is still a very active and hyper innovative segment of this industry, and Aave has the chance to do something really, really special. The way you put it is essentially finance the future, and I think there's an incredibly powerful effect that this could have on not just the Aave ecosystem, but DeFi and finance at large. If we can effectively bring these tokenized assets on chain and extend credit on these assets, and Aave is rising through the ranks as one of the top banks in the world, and this is the job of banks, is to finance the future. Aave has the chance to extend credit and create a wealth effect for high quality assets in exogenous sources of yield. And this is a really, really special opportunity and time in the market.
Yeah, I also think that the margin really comes from like not being. I think like the businesses that are run on sort of like bringing full access run on a very thin margins. Let's say like if you have a brokerage that allows any access to trading any stock, for example, or any fund investment and so forth. If you're a lending protocol and you just enable any sort of assets and lend the trust that you basically create within the audiences, I think that form of a accessibility business have a very low margins. And I think where the margins are higher and the mode is more defensive is actually when you have a bit more opinionated or quite an opinionated take on what sort of assets should be tokenized, listed as a collateral, borrowed against, and what is the composition of the yield. So the way I think about it is that the business models, whether it's on chain or off chain, that just purely like provide any sort of access, can be outcompeted really quickly with the right incentives, the right amount of funding, product execution, and that competition is fierce for very thin margins, and that creates a very, very thin value layer. But basically, a setup where you have a really opinionated take on what are the best financial opportunities in the future, have high quality yield and high quality user bases, you end up in a place where you actually have a lot of defensibility, and that translates into the branding, and that allows also to capture additional revenue. That is why the Aave app, Aave Pro, and Aave Kit are extremely important for the Aave DAO is not because it only allows to ensure distribution, whether it's consumers, fintechs, and institutions, existing DeFi users, but it allows to actually build upon that margin and add upsell to the users and build better products, and also products and features where you can move faster and monetize faster, because protocol development is of course moving much slower pace.
Right.
And that is kind of like a why this setup where not only the protocol layer, but the product layer is bringing additional revenue streams into the Aave DAO is such a powerful example. And focusing on really good products itself is really important. And I think in DeFi, we kind of lack on the idea of building extremely good products and distribution. And we are trying to sell all this sort of infrastructure to each other and fintechs. But in reality, a lot of those sort of integrations will get commoditized. So that is why the sovereign sort of a product layer is important for Aave.
Right.
And that kind of explains there then why this protocol includes brand governance, right? I mean, maybe you could talk a bit about that, the Aave brand, and why you feel formal stewardship of the brand at this current stage is so important.
Yeah, I think it's really important because in the past, for example, Aave Labs and Aave DAO and Aave token holders, they effectively share a brand services. And I think when we have a setup where basically any usage of the brand or branded products, the revenue goes to the Aave DAO, that creates a sort of revenue and product alignment. But more importantly is that we want to ensure that even if Aave Labs will exist, for example, in the future, that the brand is protected in any sort of for any sort of outcome. And that is why it was important for us to put into the same proposal. And that brand is also used for growing the Aave products on the product layer, growing Aave v4, and also the reason why we have all these elements in the same proposal, because they're all interconnected. So Aave v4 enables a lot of these revenue streams. The branding is used to grow the product layer, and also that sort of reason is basically there. So I think in overall, this proposal should set a extremely strong foundation on how we, from Aave Labs' perspective, are working as part of the DAO. So Aave Labs is part of the DAO, but working towards like a one direction and one goal. So it highlights the importance of being token centric and sending that signal to everyone. And that's just the baseline. And then the next steps is thinking of upcoming years of like how we get to the next sort of improvements that we can do, like how do we add more transparency, protection, and those kind of things that already exist in the traditional capital markets, but taking the good parts and leaving the bad parts out and applying them in token-centric world. Because I truly hate the narrative of like tokens are worthless, because they do control an extremely important infrastructure, but this infrastructure is not going to be that valuable if we don't go beyond these existing crypto assets. If you want to trade all the value in the world, you need to go beyond the crypto value. You need to go into any value that is basically a potential target.
Yeah, and Stani, you speak about the product layer, the protocol layer, and the brand governance. All of these are reinforcing one another. Another part of this proposal is the curation of a foundation, an independent foundation that would hold the Aave IP and the trademarks and some of the branding rights. How will the independence of this foundation be assured to the Aave DAO and Aave Labs? What do you see for the structure of this foundation? Maybe who do you see should be on a board for this foundation? And if there is a disagreement, between Aave Labs and Aave DAO, how do you ensure that this foundation makes the correct decision on behalf of Aave as a whole?
Yeah, the independence is the key there element, and I think independence is something that is established also in traditional boards, and there is different ways to do that, and obviously like Aave Labs is part of Aave DAO. It's sort of a permanent contributor into the Aave protocol. We get paid for doing certain things like building the Aave v4 and previous versions, and have some sort of also marketing budgets in the past. And here it's more about consolidation and basically going effectively for a growth mode from a startup mode. And of course, in DAOs, there's always various different opinions, and the strongest voices don't really actually own the DAO, and that's also like the beauty, whether it's like Labs or someone else, and that doesn't really that is the beauty of actually DAOs, is that anyone can have their voice and opinion, but what truly matters is what is on chain and what basically decisions are made. And it works in the same way in running these traditional businesses as well. End of the day, decisions needs to be made when it comes to execution. In regards to the actual foundation, there needs to be just purely independence from any party, including Labs and everyone else.
Stani, just a couple more things. Just coming back, just to finalize and crystallize the economic structure here. Could you just give the audience a quick run through as to how directing 100% of the revenue from Aave Labs built products will change the existing economics of Aave? I think a lot of fundamental analysis are really excited about a lot of protocols and tokens that are redirecting capital back on a programmatic, consistent basis. Maybe you could just talk through like what your current model is, and then what you expect the changes to be in the economics in the flywheel as a whole, if this goes through.
Yeah, the existing model is sort of quite simple, and what we established back in 2020 with the IP1, which is simple, that borrowing revenue comes into the protocol, and portion of that is taken into the Aave DAO. And then that's sort of like one business model where users supply stablecoins and they're borrowed, and that generates interest. There's also the Aave native Go stablecoin, which is sort of a second line of business, where the Aave protocol itself operates takes a margin of the lending. In Go lending, in the most cases, and in the Aave core market, there's, for example, 100% of margin that goes into Aave DAO, because there's on the borrowing side, because there is no LPs, as technically the Aave as a protocol is the LP there. And what basically happens with the Aave will win proposal is that in some ways a third business line is created. And this third business line is anything that is created on the product layer by Aave Labs. So that can be, for example, the existing swap fees that has nothing sort of hasn't had any relation to the protocol, but are simply swaps on these user interfaces, and also position swaps. So if a user wants to swap one asset that they have as a collateral to another one, or swap one debt position to another one, they generate fees, and those fees go into the Aave DAO, and it's about 10 million in fees annualized that is going to the DAO, but also any sort of revenue streams we might add even further with new products, new launches, and something, for example, we're working now in the Aave app is a Aave card. So, for example, any sort of a time a Aave user is swiping their card, a portion of that card swipe is going to go to the Aave DAO. I think it's quite cool because it's a very sort of rare model where you think you are doing as a customer of chain, and you're generating revenue that goes all the way to on-chain that benefits token holders. So fundamentally, it allows labs basically build products in autonomy, add monetization features, as long as they go directly at 100% into the DAO. And I think that is really, really powerful, because on a product layer, we can move faster and we can increase monetizations faster. And obviously, Aave v4 on the protocol layer expands some of these revenue features. For example, we have a reinvestment feature that we added in the Aave v4 protocol. So when the rates on Aave are lower than the risk-free rates, the float, part of the float of the pools, can be reinvested into treasuries or on-chain sort of risk-free products like ASCO and these types of products, and that generates more revenue. And then with the spokes, you can add additional use cases, and those can range of using LP positions as a collateral to lend, go against at 100% margin, or for example, borrowing, lending funds into qualified custodians where Bitcoin and Ethereum is used as a collateral to borrow. So this sort of OTC business is still growing outside of DeFi, and this enables that revenue stream to go back to DeFi. So there's certain elements on Aave v4 which expands this revenue layer on the protocol side. But for me, the most exciting thing is that now we actually have outside of protocol revenue features on whatever the users might be doing. So it's going to be really interesting a couple of years to think about what do we add into the app to build more revenue.
Yeah. Stani, last thing for you, what happens next if the DAO ratifies this framework, and what can the community as token holders expect in terms of follow-ups? Kind of what can we expect to come next?
Yeah, upon ratification, the proposal, there's obviously continuous development of there's Aave v4 launch that is coming, so that is going to be a big thing. There's going to be a follow-up ratification on the parameters for Aave v4, and also on a continuous basis, Aave Labs is sharing in form of accountability reports and continuous reports to the Aave community. So one of the things we want to ensure that there is a high degree of transparency and accountability, and I think it's very easy to do because all the focus is on the token-centric model, which simply is easy to point where we have to grow, where the growth is going, and what do we need to do to achieve that growth. And obviously, the vision is something that takes a few years to actually develop, but a lot of these product launches are happening very soon, and we're very excited to bring DeFi to millions of users, and also get Aave integrated into one of the biggest fintechs, and also still not forgetting the sort of the sophisticated DeFi users like myself, for example, and providing them the best experience. So we have to innovate quite a lot, and there's a lot of competition, but also we're going to see a lot of competition coming from fintechs. They're way more better funded, but we have the expertise. We rely on smart contracts. We rely on the Aave protocol. So there's a lot that we can actually build and win at the same time.
Yeah, man. Aave will win. Stani, thanks for your time today. Congrats on the proposal. And I think that the market is absolutely begging for this from tokens, from the market at large, given just the state of prices being down, but just we are ready to kind of be seen in this more mature, sophisticated light as it pertains to valuations comparables to traditional markets, as well as just the revenue potential for on-chain businesses and crypto-enabled businesses. So, Stani, hope this goes through. Hope everything goes well. Have a great weekend, man.
Thank you. And Aave will win.
Aave will
Cheers,
win.
man.
Thanks for coming on.
Cheers.
See you,
Bye.
Stani. All right, Rob.
Stani's a man.
What do you think? What do you think?
I think this is great, man. I mean, I did the math. Stani didn't directly validate that my math was correct, but I'm pretty sure if you total up, you look at this as like a trade, right?
Yeah.
And if you're the Aave DAO and you're positioned to get $100 million per year in revenue added to your bottom line, and then you look at the outflows, and yeah, the outflows are substantial by what essentially is happening from my perspective is Aave DAO's acqui-hiring Aave Labs.
Yeah.
And so these before this proposal, these were two separate entities that were both contributing and both benefiting from Aave. What you have now is Aave DAO superseding and basically absorbing Aave Labs and paying for the things that they had, but those things should pay off in like a very short timeline. My math was like less than a year it would take at the current run rate for Aave DAO to recoup its investment in labs. And then there's ongoing costs that it would pay out, but it would not supersede the revenue that they would get from this proposal. So I think it's a no-brainer. I think Aave, question we didn't ask that Stani was like, how is Aave Labs equity investors, how are they feeling about it?
Yeah, man. I mean,
feel like they're leaving a lot on the table.
That's going to be a really interesting dynamic to watch play out as these kind of token equity merges happen. Like, what happens? Do they get a pro rata share? Is there a buyout? Is there token distributions? I think specifically with this, the biggest pushback I've seen is just around like the foregoing of the decentralization or the kind of immutability or resiliency that a DAO structure gives in any sort of regulatory regime, or that is more restrictive, or just the whole idea that we're just going to put all the power into one. This vote's going to go through. I think it's obvious, and that I think is the biggest pushback. I think if we're thinking about this from a very pragmatic perspective, like we had Dave on from OpenTrade earlier talking about it, the pragmatic understanding is that if Aave is going to compete at the scale of the largest banks and fintechs in the world, as Stani said, autonomy is a must. It's a priority, and that needs to happen. And so I think there's just a lot of pragmatic lens that needs to be applied to a lot of these scenarios that often goes head to head completely with the more ethos maxi type of folks in the community, which I think is very fair. I understand both sides.
Yeah.
And sometimes, and maybe we'll get to a point where pragmatism equals decentralization at its core. But seemingly, if you're trying to compete against, 1,000-person orgs like a Revolut or like any other fintechs at scale, right? Stein made a great point. Like, this is just, there needs to be this kind of set iteration loop for all these types of decisions that isn't DAO governance. And I think it's just the sign of the times too. We talked about it. Like, tokens are going to start to look a lot more like public equities.
Yeah.
I think it's very clear if you're a token holder, obviously the last, 48 hours has been great. But institutional investors will look at this and they will want to be a part of something that has a clear value accrued to the token. Hyperliquid's obviously dominating here. We had Rune on. Sky's doing a great job.
Well,
so you see more and more of this happening, and this is just a snowball. Aave's now, who's next? This is just going to keep happening due to a multitude of factors.
Stick on Rune and Sky for a second, because we often talk about the ethos-driven decentralization of the world, which operates better because it's difficult to really.
Yeah.
It's like if you're playing whack-a-mole.
That was Rune's point.
Well, yeah. Okay. So if you're, you can't whack a decentralized network, right? But if we have complete centralization and unification of these things, it's easy for a regulatory agency to whack one entity.
Yeah, but I think the thesis is that we're going to get clarity. We're going to get the market structure built through, and that
would.
and
Look,
that
we
like
don't.
DeFi isn't going to get whacked as hard as it has been in the past. Like the
Okay.
SEC just laid off Aave. Like they just went hands off.
The
You
SEC
know,
right now is very pro crypto.
I
You don't-
agree. That's
if
an issue.
Trump
But as long as we
pisses
can
off
get
a
this
lot of
thing, yeah.
Trump could piss off a lot of people, and we could get a anti-crypto regime in next. And that's what people
Right, but as long as we get the regulatory, that's why this market structure bill is so important to get
yes,
this
to
thing
codify
through.
it into law
And
would
then
make
it's-
it much
and then
more
it's
difficult to
set.
repeal for
Yes.
sure. I do think that these are very black and white systems, and they
Yeah,
have their
and the
merits.
reality is not always like that.
Obviously, in the current regime, the centralization and unification of these forces and entities is much better because you don't have
Yeah.
to worry about regulatory whack-a-mole.
Yeah.
If you have to worry about that adversary, then you want a decentralized one because yes, it may operate slower, but it's more
Yes.
difficult to destroy.
Yes.
I kudos to Rune for building Sky in such a way that has been able to move quickly and innovate at a top-down level with their whole rebrand and how they were able to structure things, but also have this decentralized network of stars that ultimately are aligned back to the Sky pillar. Like,
Yeah, man,
Sky's
but
the
it's
one with
also the
Sky- you know
similar
what it reminds me?
situation.
You
It's
know
a
what it
similar
reminds me
thing,
of? Like
though.
real quick is like a Federal Reserve and then like these regional banks. Because
Yeah.
like you heard Rune say, Sky has the money. And so people are coming there. They're
Yeah.
the arbiters of capital. And then you have these stars that are able to supersede that from a risk return perspective.
Yeah.
If they provide that upside, they get to capture the
Right,
upside.
I understand, but again, it's still like I'm telling you, the word decentralized is used in tongue in a way that has one meaning, and you can interpret it and understand it across a whole spectrum of nuance. However, I do understand where you're coming from. I directionally agree, but there's just a lot of nuance when it comes to this
Yeah.
kind of like phrase. Look, market likes it. Market likes it. Aave's up maybe like 10% since yesterday. Market likes it. Market wants this. Market loves hyperliquid. Right now, obviously, that's one of our larger positions, if not our largest. That's what the market wants. The market wants revenue. Sky's doing well. Hype's doing well. Aave could turn around here. We'll see. But this is what the market wants. This is what the market's been asking for. This is what traditional investors want. This is what Rollup TV wants. Great week, guys. Thank you for being part of the show. What a week. We got ETH Denver next week, NearCon the following week. Guys, that's all.
The market wants you to have a good weekend.
The market wants you to touch some grass. Do that. Tell us how it goes. We'll see you guys on Monday.